Yo, what's up? Morning, everybody. I'm gonna grab myself a coffee. Joseph, what's up? I'm gonna make myself a quick espresso, and I'll be back. All right. Good morning, everybody. All right. Everybody's in. Joseph, I am so happy to be doing these videos, and I'm so happy that they're helpful. Weather too good. Morning. Pino, sup, G? Morning, VB. What is up, everybody? All right. We are down with the sickness. All right, let's just let's take a look from the top view. Let's start out on the monthly. First things first. Hey, Shalom. Left-handed hard right. What is up, Pablo, Fred C, Jay? What is up, everybody? How are you? Hope we're hope we're not overreacting to what's happening here. I feel like this is my job. Keep everybody calm and not doing stupid things during these crazy markets. Whether it is my job or not, I feel like it's my job. So let's have a look. Bob, what is up? Great to have everybody around, as always. San Juan, Puerto Rico. Cool. Okay, so let's have a look. Let's put this month in perspective. And let me get my squiggly lines off here. And we can see that, yes, Sasha. Morning, good sir. Yes, this is a historically big move, I would say. This from a high of 97.63 to a low 81.26. So 1650, I would say. 1,650 point move. High of 78.71, so 700 point move. The bottom move here back in this December 2018, high of 7,000, low of 5,800, so 1,200 point move. Largest point move, it looks like, in history for the NASDAQ. It's not true. What we want to see is look at all of these back in here, back in the 2000s. I think we had 30 when I was doing the Sasha says 24 peeps, new all-time highs. Everybody hit the like button, please. That little like thing down below. If you're new here, subscribe. You can get notified when I do this. If you're not new here and you've already subscribed, make sure you hit that like button. If you're new here, make sure you hit that like button. Hit the like button, everybody. Let's wake YouTube up. Let's get the good people over here. We already got some pretty amazing people. Let's keep bringing them in. So, yes, this is historical. I'm going to kind of draw some of these lines here of what we've been doing, where we're at, you know. So we broke out here, broke out here, broke out here. This would be our breakout, or we could possibly call this our breakout. And the reason I do that is because this is where people are likely to start buying, right? So that's our monthly. Let's take a look at the SPX and see what it looks like on the month. The SPX is actually done, it's a down 10%. So most likely this was probably, I don't know what we're up or down, but that's probably 12, 15% move in 1 month. Not very common. Not since 2008 have we had such sort of moves. Not to get all fearmongery, but it's been a long time since we've had such big moves. So again, we've got some strength here. I'll draw this. S&P is overpenetrated what the NASDAQ has done. So it's oversold compared to the NASDAQ. Actually, let's take a look at gold. All right. This is what everybody's talking about. Everybody's talking about, let's just kind of put this one in perspective. If you'll see the VIX on the monthly, let's throw a line up here instead of a bar. So I think it illustrates a little bit better. And let's paint it black and thick. Okay, so no issue. I don't really I don't deal with news, and that doesn't really affect me on any of my trading. So the question was, what evidence actually changed though with virus? Did anything? This is speculation selling. Yeah, it's absolutely speculative selling. This is people getting margin calls. This is people getting scared, but it starts off with risk adjustment on the big markets. Okay, so you're talking about, I mean, big markets. I mean, it's risk adjustment from the institutions, like something different is happening. Okay, and that's what we're seeing. So they're adjusting risk right now. Basically, something happened, and they're thinking to themselves, "Okay, yeah, this is not good." Let's see where we're at here. So everybody's talking about a bounce. That's what everybody's focused on right now. Everybody's complacently talking about a bounce. And we're going to go through all that sort of stuff right now. But what I want to point out is what we're looking at right now on the VIX. Everybody keeps talking about how the VIX is got above 30 and did all that. And then they're talking about how fast this thing fell, and it's worse than 2008 and everything like that. And then we still haven't hit 2008 levels on the VIX. High of, it's not going to show us, is it? Since I don't have open, high, low, close. That's why. Our high on the VIX got up to 96. We're still at 48. And if you look at the trend here, you can see we're really, the 50 level is something that everybody's paying attention to, but we're not really there. So, okay, let me get down to reality here. And let's take a look at NASDAQ. Okay, so where we could possibly be bouncing on the NASDAQ is where we bounced today. That would have been the high. Why does it do that? Let me just move that stupid thing out of the way. Every time I click there, whatever. So our high was 81.41 on this bar. Guess what our low was? 81.26. So we bounced off this general area here. Also low, 80.84. So a lot of interesting things going on here at this level on NASDAQ. You might have heard all-time highs on the bonds and on the yields, for sure, all-time lows. But on the actual bond futures, we have not taken out all-time highs. All-time highs were July 2016, summer of July 2016, and we still got some room to go. So depending on how big of a chart you're actually willing to look at, how long of a chart. When we get to interest rates, now interest rates have gone to all-time lows for sure, but that doesn't mean that we did it on the bonds themselves. So let's go back to the NASDAQ. And one thing I want to point out is every single person in the world is, first of all, when the market crashes, I get texts and I get emails and people ask me just casually and cool, because they actually have other jobs and they're doing other things. And what are they saying? Like, send me off a text when you think it's time to, good price to buy some stuff. And you know what? I've gotten one of those this week. In December and the fall of 2018, fall and summer of 2018, when we had that major market meltdown, you know how many texts and phone calls I was getting? I was getting a lot. People were asking me a lot of money. When crypto was collapsing after it hit 20,000 and on Bitcoin, and everything, and that whole rigmarole happened, I was getting calls left and right and everywhere. You know what I'm not getting? I like one. I got one this week. This is a week. That's 13% in a week. And from the highs of last week, again, we were at a high of 97.63, and we're currently trading at over 1,000 points lower. And not a single, well, one text saying, hey, just shoot me a text when you think we're done with this thing. Every single person in the world is saying, don't worry about coronavirus. It's not deadly. The flu is deadlier. All these other things. But guess what? It doesn't freaking matter, because the market is still doing. You can sit here and say it doesn't matter about what the market is, or what, whether it's a virus, whether it's a pandemic, whether it's anything. You can sit here and say it isn't, but the market is reacting, and this is reality. And so we have to deal with reality if we're going to trade this thing. Okay. And that's where we're getting at. So we've pretty much realized that this is catastrophic as far as the velocity of a move. That is a volatile move. And there you go, dailies. Okay, now we have on the daily, we're starting to show signs of strength here, but also we showed signs of strength there. It's, the thing about it is, I honestly, think about this scenario. What happens if we don't bounce today and we go into the weekend without Fed intervention, which everybody is saying is going to happen? What happens if it doesn't happen? That's one. Okay. Now, as we get close to the end of the trading day, if the bounce doesn't save the world, what's going to happen? We're out of bull quiet, BB. We are definitely out of bull quiet. This is bear volatile. We've moved into bear volatile for sure. Whether the SQN tells you or not, you can tell that this has changed. And so, you know how many trades I've done this week? I trail stopped my NASDAQ on Monday, I think. NASDAQ and Russell longs, and nothing since then. That's it. That's what I've done. Oh, I bought a little Bitcoin on the failed vol breakout on the 12-hour. I've done nothing. Why? Because we moved from bull volatile or bull quiet to bull volatile rather quickly. Things started to get volatile, as you saw, and then we flipped. And so now, what do? Well, you can trade it. You can try to buy the dip like you've been doing and has been working all the way through, except this is different than all of this. And so what I've been doing is just watching calmly and seeing what's going on. So let's go to the hourly, or let's go to the 4-hour and take a look. Now we have a complex bottom forming. Okay. This is the thing. You don't get bullish on this until a close above, or a move above that. So I don't get bullish and I don't start looking to trade this thing until we get above 83, 82.75. But what happened when we did this same sort of thing before? Bullish, and then it dumped. So we want to throw all this scenario. We want to put, I'm all about price action, and I'm all about playing the players when we're talking about trading. I'm not that way when we're in systems. When we're doing the systematic trading, which is the end of day swing trading, I don't get into play the player. You have to change your mind and go to a different mindset. For me, on a day trading basis, I'm looking for a reason to get long or a reason to get short. Here, there was a reason to get long. You get long, you get stopped out. If you didn't get stopped out here, you got up here and you're feeling pretty good about yourself, and then you finally get stopped out like probably here. So you just take a beating. And what does this tell you? Is this is a bottom that got bought, and bulls could not take control. Bulls had firm control of this. This is a beautiful long setup, and bulls got beaten up. And so what do? That's a vol continuation, vol breakout continuation. So you get stopped out and you reverse. And then bulls try to rally back, failed. Looking okay right here. So people said, okay, yeah, let's buy this. This is another dip to buy, dip, buy the dip, thwarted. Another dip, thwarted. Every single one of these dips keeps getting beaten down. What does that tell you? That everybody is trying to buy this dip and everybody is getting stopped out. Something big is happening, and it doesn't matter about the news. That's what's causing a lot of it, sure. But our job is to not get caught up in the news and become a virality expert or a QE expert or a repo expert or whatever Twitter is yelling about. Our job's to make money. That's it. That's all we're here to do. We're here to make money. So all we have to do is figure out what the other players are doing that have our money right now that we want, and we just have to take it from them. That's the name of this game. So we're down to the 4 hour. And if I need to ask anybody, where is the trend on this thing? Tell me where the trend is. The trend was here going up for the first part of the year. But now if you can see a chart, you can tell me that the trend is down, right? So looking to catch this, buy it, and get the generational buy that, we haven't seen since November. Keep that in mind. This is only a couple of months that we've worn out in about a week or two. So one thing is we don't need to be a hero. Nobody needs to be a hero. We just need to figure out what to do here. Okay. So let's drop it down a little bit, see if we get any sort of opportunity. Okay. Now, as we drop it down in time frame, we'll start seeing lower opportunities. So we can look at a buy above here as a potential, but every single reversal has been thwarted. Bulls are coming in harder here. That's for sure. Bulls are stepping up, but bears are selling too hard. Okay, now the scenario is everybody's saying, now whether this is true or not, the world is saying, the Fed needs to step in. And, these are the free market capitalists who are just, small government, and, we don't want any government involved until something like this happens. And they're like, the Fed has to step in and cut rates. And everybody gets scared, right? As they say. And one of my perma bears, Jesse Felder, said in an email, the guy's been bearish since 2009, March 2009, called 25 of the last 0 bear markets every day. There's no atheist in a fighting hole, in a foxhole. Foxhole is what everybody knows. As a Marine, you say fighting hole. What does that mean? This is everybody talks a big game, and they're going to buy the dip when it happens. When it's there, they're going to be there to buy it. And guess what? They did. And they, like, all of these dips, let's get back up to the hour or 4 hour. It looks more obvious. Dips got bought. 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 And they keep getting bought. We're going to see a beast of a rally today. And we did. And we're seeing, again, we're going to see that, left shoulder, head, right shoulder. People are, bears are seeing this as head and shoulder top. Bulls are seeing this as a double, triple bottom. You know, a lot of interesting things happening. Okay, so, and VB points out gold is a safe haven asset, right? What happens in gold? What happens there is everybody goes and starts thinking, oh, we're buying gold, and they raise the or gold is a safe haven, so we're going to put our money in gold, and look what happens on gold. They just wear people out. I'm long gold too, so on a weekly close below here, where's my, actually, there you go. So on a daily close below here, we'll probably do it on the weekly, is where I'm stopping out. So I'm pretty good in the money on gold, but yeah, it looks horrible, doesn't it? Okay, so what we wanted to do today was I want to go back and take a look at, I know everybody wants to sit here and stare at the market or what's going on today, but what we're going to do is we're going to go back in time and we're going to trade different, we're going to see what happened in different markets and see that it's not different this time. It's the same always. News is news, but the way it comes down to human nature is the same. People get extremely bearish at the bottom, extremely bullish at the top. And I mean, I was a super bull. I was a perma bull last week, to be fair. I'm not saying that I was Mr. Bearish and into this. It's just that when we're into it, when you have new information, you update your information, right? I know we're in this is a bear market now. We haven't dropped the statistically agreed upon number of 20%, but we certainly have dumped almost, I mean, the speed, the velocity of this drop and the length of this drop in a week. That's what a bear market looks like. It's just things happen a lot quicker now. Okay, so let's go back to the 1980s. This is the S&P 500. We had, just to paint a picture of what was going on in the 1980s, at least in the Western world. I was born and raised in the Western world, and I mean, I kind of have an idea. Obviously, in the late 70s, the Islamic Revolution took over, and you know, peaked in Iran taking the U.S. embassy hostage for a while. And as soon as President Reagan was elected, he negotiated the release and everything happened. Now, what also was going on in the late 70s, 80s was airplanes were getting hijacked. Like, it was not uncommon to hear about a hijacked airplane and sitting on the tarmac for, a couple of days and negotiating and all those sort of things. And, some planes were actually getting blown out of the sky. It was all happening for sure. There were terror campaigns in Europe. Like, there were cafes where they would just they just drive up on a motorcycle and throw a grenade out and kill a bunch of people in a cafe. Like, the 80s, like, people think that what's going on now, terrorism and all these sort of things, is new, and it's not. I just like to kind of set the stage there. We had just come out of stagflation in the 70s, which is where, all this crap was going on. This was the Nixon Watergate scandal. That lasted January, the year I was born. I'm that old. January 1973 to a eventual bottom, October 1974. So a year and 10 months, 9 or 10 months is how long this thing lasted. Okay. So you don't hear much about that one. You also don't hear much about 1968, the Vietnam thing, going from 104 down to 75. So 25% sell off there. 121 down to low of 60. So a 50-point sell off. You don't hear a lot about that. But this is what happened in the 80s is you had this thing called Star Wars and you had debt spending. So President Reagan got the first $1 trillion deficit and the government started printing money. So, in 82, basically when, the election happened, and then, kind of the first part of the presidency was kind of tough. Now, also remember, it's not historical that a president was embarrassing. Like everybody was walking around saying, I can't believe a Hollywood actor is our president. How statesmanly is that? How, it needs to be a diplomat. It needs to be a respected businessman or whatever. And he was a firebrand. He was crazy. He was wild. And now he's known as the great communicator, which is really interesting. So in the 1980s, we had this beautiful double bottom, which is why I love double bottoms. And you could see it was a triple bottom. You can call it a number of things. But I see we had a spike and it rallied. And what happened? Because all this had been happening. We had rallied basically, if you were long from 60, you got into, 140. So 80-point move, 120 or 30% move from there. Pulls back, all you're getting is every dip getting bought. So you're conditioned to buy these dips. This dip gets bought. We have that big tail on there, and all of a sudden bulls are in and they're excited and they got stopped out, right? And so what happens is now those bulls who got long here, they place their stops right here, right below this one. And I always talk about this because this is important, because where bulls got stopped out, is where buying eventually happens, because you gotta wear out the bulls and you gotta wear out the bears. You gotta wear everybody out. Okay. When you wear people out, that's when you get these big relief moves, because then you have this move happen, stopped out, boom. Okay. They stopped out. And then all of a sudden it rallies again from there. Bulls are like, okay, I'll take another shot. And they take another shot. And then guess what happens? It goes below their stop here. Right? Goes below their stop here and it rallies. Okay. Now, so early bears getting in are having a good time. Bears getting in here are having a good time, but bears down in here are going to be weak hands. So they're going to place their stop to buy here and their stop to buy here and their stop to buy here, stop to buy here, all the way up. Okay. So you get that. And then it comes down and then somebody comes in and says 100 has to hold on TV because it's a nice fancy round number that everybody likes to talk about. And 102.20 hits, we go higher. Maybe some bulls got on it and you have a big power move. That's 11% move in 1 month. Huge move off the lows. And suddenly you have buyers coming in. Okay. And then bears making another attempt. So once we got above here, you got that spike, bears get stopped out, they cover. And bears are emboldened. Bears are thinking, no worries. We're going to have a good day. Things are going to work out for us. And all of a sudden, they keep getting stopped out. Because this one held, this swing high held, bears are getting bearish here. And so they push that down. Once that breaks, you see how big this candle is. That means bears are covering and bulls are saying, crap, I missed the bottom. I got to get in. And they start chasing this. And then when we break above this one here, you have some battles, and then it just keeps ripping. Now, all-time highs, you get this big, massive, another, almost 10%, 7.5% move, and then consolidation. So now everybody's starting to think to themselves, oh, well, bears are like, okay, we're done. We're going back, because they still have the recent memory of how bad 1982 was. Bulls are thinking, well, we just spent a year, 1982 to 1983, basically over a year, just going straight up. So everybody's tired. We're going to do a little pullback, test it, and boom, bears are going to get stopped out down here. As you can see, these big candles are bears getting stopped out, usually right above those swing levels. That's big candle time. Pay attention to that. That happens. Okay, and now we're getting into the 1985s. Now, this is where it's important, because 1987, Black Monday, Tuesday, whatever it's called, was the like most notable. Okay, in recent memory, the old guys in the market right now, the baby boomers, they remember 1987's crash, and that's been imprinted. That blueprint has been imprinted upon them for the last 40 years. They remember it. And then they remember the 1987 crash. They remember the recovery. They remember Gulf War I. They remember the recovery. They remember tequila crisis. They remember now a lot of people don't realize all this stuff happened in the 90s. They remember the Thai baht, the Asian stagflation or whatever it was called, the Russian ruble crisis. They remember all that. They remember the dot-com bubble sitting smugly saying, I remember 1987, this is not going to end well. And they kept yelling at the market saying it's not going to end well into 1999 and 2000 until they started buying it. People like George Soros capitulated, and they eventually bought the top of the market. And that's when in 2000, it melts down and kills everybody. So then they're still smug and bearish constantly. And then we go into a 4-year recession or so, 3 or 4 year recession from 9/11, the airplanes flying into the building, crashing the building, going down. And then we, for the next couple of years, we were already in a bear market. And then those 2 planes took down the World Trade Center. And what did that do? That basically, water. So that pretty much, we were already in a bear market. And remember, when you're in a bear market, bad news has adverse effects. When you're in a bull market, bad news lasts a day, but it's a buying opportunity. So now, unlike the last year or so, when bad news hit the market, the only thing that was happening was everybody was dumping, right? Or everybody was buying. That's it. When good news hit the market, everybody was buying. So you get a small dip, but it rallies. And it may last a little time, but it doesn't last all that much. When you're in a bear market, you can take bad news and it'll just pummel the market. You can get good news and it means nothing. That's what market regimes are all about. So let's have a look a little further. Awesome, guys. Thank you for the likes. Thank you for sharing. Thank you for joining us today. Hopefully, hopefully this is useful for you all. I'm going to ask that you guys share this on Twitter if you don't mind. I'm going to put the link in here. If you guys don't mind, share that, retweet it, like it. Let's get more people in here. We got a good day going today. I'm really enjoying it. I know everybody wants to actually get at the market and start trading it. Let's just throw this up here. Again, there is going to be an opportunity to buy if you're looking for it. Small opportunity buy here on the move above it. I'm gonna get logged into my trader workstation. I actually haven't even done any trading, so I haven't done too much. I haven't really been logged into my account because I didn't really need to. But let me do it real quick. Thank you. Thank you, Valuables. Cool name. Thank you, guys. Don't forget hit that like down below. Let me just remind me. We're going to want to take a look at the top of the hour to see if we're actually going to be looking to get long here at all. Okay, so kind of what I was getting at is now we're into this nice big bull market from basically, you can say from 1974, other than the fact that this, wore it out in, such dramatic fashion here, but it is a nice, sell-off, and we got long. Okay, so VB, we're looking at an opportunity to scalp it real quick. probably get a little bit. And for me, that would be meaning trading like a single micro contract, like a very small contract. Actually, I'm probably going to do let's go to RTY here. I'm not saying I'm going to buy it, but I'm looking at it and seeing, okay, this might be interesting to trade. NASDAQ's holding up nicer than everybody else. So we'll be paying attention. I'll be paying attention as a possible trade. Maybe not. We'll see. Okay, so back to what was going on. I want to relive what's going on in these previous sell-offs so that you understand what and you can understand how to deal with what's going on currently. This is not the sort of sell-off we're dealing with. This one possibly. As you can see, it was kind of a spike high, but it wasn't really like a blow off high. But you had some big, you had some big 10% selling. So let's just kind of take it. NM, I doubt it. I think everybody's waiting for a dip and everybody's waiting for a bounce. So it's going to be tradable for a few minutes. But I think at the moment, I think things are just too dramatic. Okay. Let's have a look. So, okay, we had our massive year-long bull market pullback. We did another election year. When it became obvious that Reagan was going to win, that's when markets bottomed there. This is what happens in election years. Understand, election years are always volatile. They always have some chaos. You don't know what's going to happen in an election year until it becomes obvious that a candidate is either the incumbent or the newly elected or the candidate that's going to be coming in is going to win. Markets don't do anything. Okay. They're going to do this wackiness. Okay. But once you have the candidate that the market agrees is going to win, or at least the big money in the market, the big money in the market is thinking, okay, well, we're not going to make moves unless they're real moves. So I'm not going to put my money to work until I know what sort of regime is going to be in the office and what sort of Congress and House we're going to have, right? Once that gets figured out, at least in a way that the Wall Street feels comfortable with, and they're like, okay, yeah, this person's probably going to have it or whatever, then the markets tend to take off. And that's what we have here. Reagan pretty much, they figured out Reagan was going to win. This was all, I don't know if Reagan's going to do it. It happened and they were off to the races. So let's take a look. We're in the 1985s. And the reason this is important because 1987 is still a footprint on a lot of market participants, and especially the big player, the big money, the old folks in the game. They're going to remember what happened on 1987. So let's pay attention to that. Okay, so Reagan continues his thing in office. He starts now, steamrolling, and everything is kind of happening, and the market's off. There's deficit spending. They're doing Star Wars, so there's a bunch of money going into defense spending, which is basically saying, hey, we we have a bunch of jobs. Those jobs are, people are getting high-paid jobs. That money's going back into it, and we're outspending the Soviet Union at this point in time. They have to keep going into it, and we just outspend them, and we just kept printing money to take them out of the game. Now, what does this look like to you? Does this look crazy volatile? Does this look too out of control? This looks very similar to what we just went through, right? 7% month, 5% month, 5% month, 6% month. We go from this little pullback. I mean, in 1982, we were down at like 100 and we're at 244. How many times have you sat here and listened to somebody on Twitter or on CNBC or Bloomberg sit and complain about a longest bull market in history and blah, blah, blah. And we've never seen a bull market like this. And this is just unprecedented. Now we get into 1986. Now we had a month in 1986 after going from the 1982 low of 100 to 250. So 100, 250, 150% move. Okay, we're getting close to the top. Okay, so I'm not going to be buying this just yet, but you know what's happening? Everybody's starting to buy this. They're seeing this happen. Everybody's expecting the bottom. We've got bottom held at the end of the hour, bottom held at the end of the hour, bottom held at the end of the hour. Buyers are stepping in. So what do you have here? You have a range of 81.26 to 83.22, 200-point price range on the NASDAQ. I do not have position sizing correct to handle that. I'm not taking the trade. I just can't do it. Position sizing does not allow. We have a good bottom compressed. Look at this. This is what compressed volatility looks like. 200-point moves, and the volatility is compressing. That's 3 Qs. So we're gonna get some buying here, and this could be a face ripping rally. They're wanting it to be a face ripping rally. This is a 60-minute chart. Cryogenics. Okay, I'm gonna go and see a couple of the questions before we go back to current situation, completely different from 2008. So Kudlow just came to the market and said, we are nothing like 2008. So that's why we're getting this bounce, I suppose. Take a look what's going on. Yeah, gold getting monkey stomped. Okay, let me go up to messages. Sorry, I had a bunch of messages that I did not get. Big bounce in bonds. Let's have a look at bonds. Yep, there we go. Bonds are participating. What events actually changed though with the virus? Did anything? This is speculation selling. Yeah, sure. Doesn't matter. It's happening, right? Mandilo, it's happening. And so we just got to deal with reality, not with news. News is not relevant. It causes movement. People reaction to it is what I do here. Can it bounce back next week? Maybe. Also, supply chains reconverging too is different. Second effect. Yeah, totally. Yeah, there's a lot going on. All I'm going to do is I'm going to play the players. So I'm looking at what are market participants doing? How do I position myself to take advantage of that and not lose? Right now, doing nothing is my best strategy. Okay. I also remember reading a couple weeks ago that this is about the time that Chinese supply chains would actually be felt in retail. Yeah, that probably makes sense. Does this change our bull quiet status? I answered that. VB. Yep. Everything needs to collapse. Okay, so price action this week. Yes, Joseph. LOL, my man. Left-handed, hard right. Okay. excuse me. Everything needed to collapse. Houses and cars were dirt cheap in 2009, but everything it took to build and maintain them didn't go down. Okay. QE poisoned the well. Okay. Wow, golden yen on the move. Yep. Okay. One thing social media has taught me is that most people's memories are only about 10 years old, if that. I mean, people keep talking about 2008, but they didn't experience 2008. I experienced 2008. I was trading it. I remember it. I actually wasn't in the States. I was in South America, so I had a different perspective. The housing crisis did not affect South America like it affected the United States. Okay, let's have a look here. Okay, so we got the 4-hour updates. I'm sorry, the 2-hour, the hourly updates. And here we are, 60. It's looking nice. It's looking nice. No doubt, traders have taken a small long here. The thing about these, and the reason that people are going to take this, is because this happened yesterday and it happened the day before. Right at about 9 or 10 a.m. is when you start getting your reversals and people get this nice move up here. That's what happened yesterday. You had that big bottom, nice move up, and then it dumps in the afternoon. So let's take a look at the 2-hour. Beautiful looking bottom right there. That's a textbook bottom formation. If you were looking to scalp, this is where you'd be looking to scalp. Let's take a look down at the 10. So the 10, bottom, rip, bottom. This would have been your entry on the 10-minute right here with a buy step above this level. And you're about 1 hour into it, and that's about it. So now we're 1 hour into it, and let's see what sort of magic happens. This is where a bottom would happen if it's going to happen. Let me put that out there right now. I'm not calling the bottom, but this is the sort of bottoming pattern that traders who want to get long are looking for. Okay. Now, with that being said, this flush out, a low below this one here, is going to run more stops. And I think you have bulls who are long here. There are plenty of people. If you've learned nothing else about this week, is everybody's sitting here hanging out, wishing they were waiting to catch the bottom. Nobody's saying, should I sell everything? Everybody who's sold everything has to have sold things. So a lot of people are just looking for any opportunity to get long. Okay, let me continue with the comments here. Thank you for everybody who's liked our video here. Everybody who's liked the tweet and retweeted the tweet. I really appreciate it. That that we've got a good number of people in here today. We're increasing the numbers every day, and it's you guys that make that happen. It's me giving you something that you're actually interested in hearing about, hopefully, that you keep coming back for. But it's you guys who are doing the work, simply hitting the like button, simply liking a tweet or retweeting, simply pinging a friend and saying, hey, this idiot, he's okay. That is super useful. Okay, so we have a inverted head and shoulders down here as well. We've got all sorts of bottom formations here. Okay, that's less of a bear flag, and that's as traders see this is more of a wedge. So let's just see what bears are going to be seeing on this setup. Something like this probably, or maybe something like this even. I'll put both on there. The reason I'm doing this is I just want to see what the other players are seeing and what they're going to be reacting to. Okay, that's it. So we have kind of that going. We're going to have this going here. A lot going on. So all these lines, other traders are drawing. And if you're short, this is your line in the sand right here, or right here. You might have got stopped out on this one because this is a strong bull candle. But understand, bears are going to be weaker down here. Okay, they've done a lot of work and they want to lock in profits. That if you've just shorted today, you're dealing with a lot of drama. If you've been short, if you got short yesterday afternoon where we started, where we were calling the tops and saying this isn't done yet, if you got there, you're in. Let's just be generous about it and say you got in down here, 86.76. You're like 600 points into it, 500 points into it right now on a winner overnight if you sat through it. So had you done that, that's 500 points from yesterday on NASDAQ. That's crazy. Okay, so let me keep with my reading. Question regime. So if trend is down, why look to buy, VB? That's a strong bottom. It's worth trading. Any indices looking like they want a bottom this morning? This is the question everybody's asking, NM. Everybody's asking, where's the bottom? I want to buy. This is how you don't get a bottom, right? If you don't bottom and everybody's looking to buy, that means there's a lot of buyers that have been stepping in here thinking this was that massive, huge bottom that's going to happen and they're going to rip. What does that mean? There's still buyers in the market. So that's how you continue to stop your buyers out. They get face ripped. Keep stopping them. Keep stopping them. All we've had in the last while is every dip has been bought. And every rally has been bought. This is the first dip that hasn't been bought strongly enough. And everybody is saying, not you and not picking on you, NM, but everybody is saying the same thing of where do we buy? Where do we buy? Nobody's saying, why are we selling except VB? Okay, VB, can we review after the SPX historical chart, the setup for today, i.e. what makes us see a scalp long? I think I've covered that. See, Mayor, it's Black Friday. Yeah, seems to be a different version of Black Friday. Okay, Pablo, ¿qué tal, hombre? Chris, I have a question regarding stop loss. Do you have any rule if the candle closes way below, let's say 2R, do you always wait until the close? Or let's say you have emergency stop if the trade goes too much against you? Yeah, definitely an emergency stop. Yeah, I'll hit a point where I'm just like, this is unrecoverable for me. Even if it recovers, I'm just not interested in sitting in this. So you learn that on your own, doing your back testing, doing your work, all that. See, Mayors, it will be a crisis year so far. Yep. 60-minute, I answered that. No salvation for the creator. God is an illusion. Okay, cool. Check my twits. And here we go. So now think about this. You're aggressive traders. Let's just clear all that. We know there's going to be trend lines. We know things are interesting. So aggressive traders bought the long here. So the better traders got long here, and they're likely going to have a stop right in here. So if these lows get taken out, I'm saying we may get another rally. Things might get wild. Okay, let's go back to the 1980s. So now, actually, one more check here. Okay, so let's go back to the 1980s. You can condition me to be a buyer after the last few months, which is why I'm asking about a bottom inside. Yeah, no, I mean, we were in a bull market for sure. So yeah, you definitely want to be long in a bull market, but you also want to change. When things change, you want to change. I'm not picking on you, NM, for that. It's absolutely the question everybody's asking. No problem whatsoever. Pablo, yeah, and I want you to back test this. I want you to get an understanding of what it actually like. Though back testing isn't the same as live trading, what you're doing is you're rewiring your mind to understand what's actually happening. Okay, you're conditioning. The neuroplasticity in your mind is so used to something that you've convinced it to by what you've looked at in reality. So going back and reliving reality in a different way through the back testing is what rewires your mind to say, oh, okay, I get it. And then you find patterns. And if you take note of max favorable excursion and max adverse excursion on the trades that you're in, you're going to be able to statistically understand where to place your best stops, your take profits for the highest win rate, best return, your stop losses for the better places to not get hurt, and understand it. So, okay, let's get back to the 1980s. We're down 2%. We had a 1% rally at least on the NASDAQ, and so far it's not holding. So let's just let the market. So now we're in an uptrend, and you see we have the first signs. This is a reversal top. This looks very similar, I might add, to what we're in right now, if I may. Let's do a weekly. Let's do a monthly, actually. We're comparing months. So this looks somewhat similar, as you can see, to like 1982 right here. Got that good double bottom reversal. Hey, imagine that, a double bottom reversal, and you catch the bottom. Bob B, my man. And you catch the bottom here on the NASDAQ. Easy to look back at that and say it, of course. And this thing rips, and we get new highs, and we get new highs, and we keep getting new highs, and all these dips keep getting bought. When it feels like, I mean, this one right here, for example, this was in August 2011. If it was either a flash crash, or I think it was a U.S. debt downgrade. So I think, if I recall, this is when the U.S. got downgraded their credit status. So that was a crazy month. That was a high of, so we had a high of 2395 and a low of 1972. So it was a 400-point move. So that's 10, 20%. That was a 20% sell-off. So first thing I want to point out is that everybody says that this is the longest bull market in history, but if that's a 20% sell-off, that's a bear market. How many bear markets existed in this whole rally up that people casually glance over? There's a lot. But you can see, so in here, back in Volpocalypse, this is Volpocalypse. We went from a high of 7,000 to a low of 61. So 2,000 point drop in like a week, if I recall. And then volatility after, and it rips to new highs. So while we have, so 3,500 would have been a, 700 would have been a 10%. So this is almost a 30%. Is that right? 7,000, 700 would have been 10%. So almost, yeah. So almost a 30% drop. That is a bear market in 1 month. Same. Lots of that happening. And what did we do? Rip to new highs. And so if you put this in perspective, we were high, God, I hate that, 71.39 to a low of 58.580, 58.20, another 15% or so. This actually was a definitely over, this is a 26% sell-off from highs to low. We're only at, I think we did from 97 down to 82, so 1,500 points here. So less than 15% sell-off currently. And here we are in that range. Bears and bulls are fighting it out. This is massive. Massive bottom battle happening here right now in front of our eyes. And it hasn't resolved itself yet. Bears are firmly in control. Bulls have launched a bunch of attacks today. A lot of fighting today. Everybody is coming in saying, well, they're going to do something over the weekend. I want to be long the weekend. This is the market bottom. People are just paying attention to it and thinking, this is the place to be. Who knows? Okay, so back to 1987. This is our first sign of weakness And that was a real weakness. That was I mean, this is a big dark candle. You haven't seen a candle that big, and that's what I want to point out. You go like a year, so August to so almost a year of straight buying, and then a year or two of a year of sideways, and then 2 years of straight buying, and this is the first sign of pain in 1986. And because we're in what's called a bull market, what happens? They buy it. And that was on a monthly. So it's not, it can take some time. We're 1 week into this bear market sell-off or this volatility. We're 1 week into it. That's it. It can take a whole month to do it. So as you can see, top, super bullish. This is a hammer in an uptrend. This is one of the most bullish patterns you can get. You buy the hammer, you buy stop above the hammer, and they do, and it gets thwarted. What does that tell you? What do we know about the most bullish chart patterns? What do we know about that? If anybody has followed me and you see the opposite of the most bullish happening or the most bearish things failing, what does that mean? That means that if the best buy setups in the world, and this is just trend continuation, as you can see, every hammer in this trend was, it got a little beaten down, but it works, okay? Hammers are buys. Anything with a long tail is a buy. And what happens when that fails and gets stopped out? So you have this, you have outside, inside, outside bar setup, change in the market. So now what we're seeing is that absolutely correct. We have a 10% move in September, the weakest month of the entire year. Think about that. Weakest month historically for the market is September. And as advertised, now everybody who's in the market that manages big money has this tattooed on their brain. Okay. When I say big money, I'm talking about the Jamie Dimons, the people that are running the big banks. They have this stuff imprinted on their brain. Okay. And so here we are again. We got our buy stop filled. So far it's holding. We come down to test, and so far it is looking really good. If the 10-minute trade happened, remember we did that long off this one here, and it's still coming back up. So far, I'm not taking this trade. I am not a buyer of this market yet. I know that we have a huge potential for a rally today. Huge potential for a rally today, but and everybody's hoping for the rally. So we're going to get some sort of rally that's going to be violent. And if it fails, one, if we don't get that rally, it's going to be ugly. Two, if more likely when that rally fails today, honestly, unless we really get a flywheel behind it, I don't see a big rally happening. And I think it's going to be a tough conversation for over the weekend. It's been tough. Everybody, even the bears, have been having a tough time. It has not been easy. Okay, let's take a look again. Now we're back into 1986. We know 1987 is the Black Monday, Tuesday, or whatever it was. So we know that's coming, and that's why we're doing this. But see how bullish the market has been, the S&P 500 in the 1980s. This is all happening. We could think to ourselves that at this point in time, you see how narrow these bodies are? They're all big, but they're all fairly narrow until we see these big ones up here. So you're in the bull volatile, as you can see. That means the open to the close is much bigger than this range here. This was all bull quiet, bull volatile, stopped it, bull quiet, bull volatile, stopped it. When you get bull volatile market, that's when it stops that's when it stops the charge. So bull quiet, you get to a bull volatile, you get a top. Bull quiet, what you need bull volatile to get a market top. Okay. So now we have this consolidation, which we spent a year doing consolidation after the recent run, another big year-long run and sideways consolidation. And now we have a bullish candle in an uptrend. After a pullback, this can't be more bullish than anything I've seen in my lifetime. That is a buy and a buy and a buy. And I'm just kidding on anything in my lifetime. But guess what? Trolls them. So you get long here and you don't put in a new top. So people are getting weak. Longs are thinking, crap, what am I going to do here? It's supposed to, we rallied down to 200 has held. We haven't broken 200 yet. Everything's good, but we can't put in new highs. We attempted to get a new high. We didn't even get a new high. And so you have bears that got super bearish here thinking that's the top. So whenever we see something like this and a big explosion of a candle through it, that means that's where bears had their stops. Bears were short, smug and confident all along here. And every time we have one of these reversals, you can see a bearish candle is always going to have a big, massive bullish candle. And remember, when we didn't see these were massive candles, relatively speaking. Now we can see that this is a massive candle, okay? So now we have ripped bulls or bears' hearts out. Bulls got long, got scared, probably stopped, got long again. And so you get a massive candle where everybody's jumping after it. All right, so now if you're trading and you took the long, you are in the money and everything is looking good, right? You're long here. We've got our head and shoulders bottom. So bulls are seeing head and shoulders. Bulls are seeing triple bottom. Bulls are seeing double bottom on the day. This gets taken out. Now we're going to want to see this one get taken out, which is where some bears are going to have their stops, right? High of 83.22 even and 83.24. It took that out. So that gives that volatility that we need. Now we've taken out a few bears. We've added a few bulls. The stack of holders, bulls are starting to get a little more excited here. They're starting to see things as they want, the markets want to do it. This is what the 30-minute looks like. So this is going to be really important for everybody. This level is going to start being a lot more important for the market because we have this sideways rectangle pattern. Let's just see. Bonds, new highs. Bitcoin getting a bounce. Trolling my friend. Okay. So we're if trading, take that long. I mean, bears are going to see this and they're going to start thinking, okay, well, I'm going to place a stop here, trail stop here, trail stop here. Ultimately, I would say another trail stop here. So you got to get above 8,800 today to start taking out the majority of the bulls. Otherwise, this is just going to do it. And Really nice setup. Now, remember, the most bullish setups in the world, if they fail, like just imagine how horrible this could be. We're only down three quarters of a percent right now on the NASDAQ. We're still down 2% on the Dow and the YM, or everything. Nikkei's down 3%. So we're watching. Anybody trading this, let me know. I'm not trading it because, hey, the risk ranges are just so wild. And, I really don't find the need to like put massive risk on to get this sort of trade. Okay, so we had that and bulls took control. Think about that. This is similar to what we have right now on the hourly chart. Bears are in, we could just invert this. Bears are firmly in control. And then we have this beautiful topping pattern that bears are really excited about. And here we go. It just keeps trolling the markets. And now we have a topping pattern again. And inside sort of action, inside action. And so this is getting bears back because it's a $300 level, remember. Remember that even numbers, everybody was going crazy about $300 S&P at this point in time. Everybody was going crazy at $200 S&P at this time. So we have a lot of drama and a lot of emotion going into it. And then we blow it. Think about 3,000 S&P we had. Think about what that looked like, right? Once it breaks, closes above 300. Somebody says that, well, closing above 300 means that we're long and blah, blah, blah. And so they go long and somebody says, yeah, of course that's what it is. And so they do it. And we get into August. Now, remember, what month of the year is the most bearish month of the year, typically? Opposite in a bear market, by the way. That's September. And so we get this ugly little bear day that it turns into a beautiful long setup. You see this hammer in an uptrend. You're at 330. You put in 10% work above it. That makes sense. You're like Dow 10 million, S&P. We're doing it. This doesn't look too different than what we saw in the market recently, right? That doesn't look too different. It just keeps ripping. Breakout of 300 S&P is similar to 3,000 S&P. Okay, it's looking good so far. Nice tradable bounce. Okay, so now we know we have a hammer and an uptrend. We know we've just put in a nice move. We've pulled back a little bit. That's a big long tail. We held 300 support. Somebody goes on TV and says, we held 300 support. It's going to be amazing. We're off to the races. And then October happens. This was Black Monday. This was a 21% move in a month. Okay. But actually, that was a 323 to 216. 120-point move is almost 50%. That is almost a 50% move in 1 month. And that's how fast that happened. That was 1 month. And you went from 330 to 200, which held. So now the world thinks 200 is important. And so what happens the next month? November, right? Like this is think about this. That's almost a 50% move. Think about that. We were at 9,600 NASDAQ. We are currently at 8,300. So let me see where we were. Absolute high, 97.63. Do you know what 50% of 97.63 is? It's far lower than 8,000. 8,000 is held. So everybody's happy. 8,100 held, actually. Everybody's happy. People are going to start chasing this thing. This is a beautiful, complex bottom pattern. Looks bullish. We're in a bull market. Everybody's happy. This thing has the power. Once we get above 83, 82, that's our next target. We'll see how things work here. Nice trade. I'm long small amount on the NQ. Good job, VB. Cool. So VB also asked, will we put a sell stop below the low on the 60 NQ? If this thing, when and if this thing fails today, I'm not 100% saying that we're going to fail. But if this thing fails and we go lower, it's going to get ugly, especially towards the end of the day. Okay, so all-time high, 337.89 to all-time low, or to new low, 216. Did I say 3337, 216? So 120 move. So let's just say a 40% down move. What's a 40% down move in the NASDAQ? 97.67. So I would say about 5,000 is the equivalent of 1987. So yeah, about 5,000 is possible if we look at this, and you just see how nice that bull market moved, right? So let's take a look at the monthly here. Just look how nicely this bull market moved. Boom, 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 boom. Every time we got weakness, this could be considered the 1987, similar sort of thing. What I'm trying to get at is I'm not saying every market crash and every market correction is similar. What I'm saying is that you have footprints. There are traders who traded 1987. They've traded, you know, the Iraq invasion or Iraq invading Kuwait. They traded the tequila crisis. They've traded 9/11. They've traded global financial crisis. They've traded the U.S. debt downgrade in 2011. They've traded everything. And so they have those footprints on their mind, and we're playing their game. So we just want to know what happened and how to be comfortable with it. VB, nice trade. Congrats on that. I don't know if anybody else is in there, but nice. Also, let's point out how low this act, you know, how crappy this was. All-time high, 255 to a low, 233. That's a 10% sell-off. That's about almost a 10% rally. This was 254 down to 228, so 25-ish point sell-off. So this is about a 10% sell-off. So we had 3% rally, multiple rallies here above 100 or 150 to get above 200. So from 200 to 250, we're looking at, you know, 25% rally. And then we have about, you know, big sell-off, big rally to fail. This is an outside, inside, outside reversal. But this thing here was, look how many months we had of that. We had these massive moves up, and then we had these big sell-offs that people don't even talk about today. From a high 254 to a low of 228, 25%, that's a 10% sell-off in 1 month. You never hear anything about 1986. Nobody talks about 1986 because look at that. It's just off to the races. You have a 15% rally after a 10% sell. So this is like volatility, but it looks so cute and simple. It looks massive here, right? But suddenly it looks cute and simple compared to 1987. So we've had our volpocalypse. We've had our 2018 meltdown, and we've blown through it, broke out, and we're off to the races. Everybody who traded the 1980s, this is firmly footprinted on their mind. And then now here's what we got. We have our double bottom pattern. as we always have, which is my favorite pattern to trade when I'm looking to trade these things. And so now you have spike low, attempt higher, reversal. This is a long. We know it's a long. This is what we're looking at right now on the NASDAQ. This is exactly what we're seeing. It's just playing out on a monthly chart, but it works on all time frames. The same double bottom or triple, if you want to call it, that same down, spike, reverse, another attempt, and then you start wearing people out who are a lot of people are thinking, oh, I'm not going short, I'm not staying short into the weekend, right? I'm not staying short from at 220 after we were at 350 a month ago. I'm not staying short there, so I'm going to take profits. And then you have people who every month add to their 401k IRA. Every month they get a paycheck, and whether it's dollar cost averaging, whether it's the market going down, or they get a paycheck every month, and so they add to their positions, and that's what we get, a perpetual bid in equity markets. So you're always looking to be more long than short when you trade these games. Okay, so we had our bottom. Now we're getting scared. Okay, we had a rally off the bottom. Okay, is that it? Everybody still remembers this. They're scared. They're shook. We're going up to the right shoulder here. Now we have that head and shoulder pattern that everybody is so fond of. Now we're starting to look. Shorts are going to say, maybe I'll take another stab at this, getting back down to $100. And they try. They get short. Maybe bulls are exiting, but now we have that reversal pattern. And bears are seeing, okay, this is good. We know what happens when these big, ugly, bearish patterns, this is bearish rally. We know what happens next. In price action, we should see a sell-off. This should sell. If it doesn't, we're bullish. If it does, we continue to be bearish. Okay, now that's a bullish pattern. Uptrend. Bears are seeing it as, whatever. Bulls are seeing it. Bears are saying, yeah, I'm not willing to stick here. Bulls are saying, yeah, I'll get long here. And now we take out this high, take out the bears' last chance high, and that gives us some drama. So we're in here, and then suddenly people are talking about Fibonacci levels and waves and things. So we're not going to do a lot. And we're going into an election year. Remember, this is an election year. So at this point in time, it was unsure. Summer of 1988, it was unsure if George Bush Sr. was going to get the election. We're going positive right now, by the way. You'll notice that positive is also the high here. So let's watch bears get stopped out. So high of 83, 81, 75, and we got it, 83, 89. So now bears are going to get stopped here, and then the next bear line in the sand is going to be like right here area. That'll be the first one. So any of these wicks, bears are going to see as trail stops. Okay, bulls see this as a buy stop, double bottom. This got taken out. We're above that high. Bulls are feeling pretty good. How you feeling right now, VB? That's looking good. Bulls are seeing this. Bulls are starting to wake up. You know what's happening on Twitter right now. You know what everybody's talking about. Some news is happening or something. Something's happening. Okay, so there's rumor of an intermeeting rate cut. Last time this happened in 2008, they cut by 75 basis points. I don't know if we have 75 basis points to cut. Who knows? Whatever. I'm just me. I'm not Jay Powell. I'm not the government. Okay, so yeah, we all know this is the thing about it. This is the thing about this rate cut, and this is where it gets goofy.
Everybody's expecting this rate cut right now. You're getting close to 1R. Now we're seeing it. Good volume, good trade, good trade. So here's the thing. Excellent trade. Good work, VB, getting in there. Here's the thing about this is if we don't get 75 basis points and we only get 50, what happens to the market? If we only get 25, what happens to the market? What if we don't get a rate cut today? This is the thing. Everybody's expecting this rate cut to happen. I've been saying it since Wednesday, I think. And basically what I was saying was if we don't get a rate cut, like nothing is going to stop the selling. They're forcing the Fed's hands to do a rate cut. That's just what the market needs. It needs money to do this. And if they don't get it, so we got our capitulative reversal on bonds. That rhymes with what's happening in equities. Good trading. Everybody who got in, if not to worry. There will be opportunities everywhere. Okay, do not trade SPX. Do not trade SPX options. Do not trade SPX options. I just got a warning from one of the best traders I know. I've interviewed him a number of times, Darren. He's a vol trader. He just got off the phone to one of his buddies at the CBOE who talked to the head of the CBOE. Their quote feeds are off. Okay, this is risk that you don't think about when you're back testing, when you're looking at markets, when you're looking at markets, when you're thinking about how you're going to trade a massive meltdown in markets. You don't think about quote feeds being off. You don't think about not being filled at the price because it's ripping away from you. You don't think about all those sort of things. And so you get yourself in a world of hurt doing this, okay? Okay, yes, they are stepping in. Banks are stepping in on a Friday. Swiss National Bank is stepping in. So they are intervening in markets right now. This is going to get pumped. This is happening, okay? Now, this is our last line in the sand. We've already taken this one out. The next one's here, which should just get blown out. Remember, as I say, we take out big candles, big stops, we get big bodies. If you have multiple contracts at this area, this is going to get ran. You want to sell into this, not buy into it if you're already in, okay? Because what happens is oftentimes you overrun these stops, which we just did, and then that's when the pullback comes in because suddenly everybody is seeing that as bullish, missing the bottom. So we've taken that out. We've taken that out. Now we have 86.50 or so is our next level. Lawmaker said to discuss $6 to $8 billion coronavirus supplement. And then also, not a good idea to get FOMO, Pablo. No. Goldman baseline sees Fed cutting 75 basis points. This is what I'm saying. The headlines yesterday, when we were watching the market yesterday and this rally happened, remember the rally that happened yesterday? It was super bullish. You had this big hammer candle. We had a failed vol breakout. Remember, failed vol breakout here. I think that was the trade. Yeah. I think it was maybe a longer time frame that I was looking. But remember, we had that happen. And it didn't happen on news, right? It didn't happen for any reason. There was no reason whatsoever. This is a 2.5% candle move, FYI. Statistically, those are as rare as they come. 2.5 candles in, or 2.5% in less than an hour. Let's see how long that's a 1% move in 10 minutes, about 8%, 80% move. This was the sign 1.5, so probably almost a 2% bounce this morning. Remember, failed vol breakout, you got long, you could have got long here and you're ripping on it. I'm not running a victory lap because I didn't do this trade because my risk levels don't do it. However, remember, now we actually have something for the market to bite on. Until now, there was nothing to convince people to come in. It was just, oh, we're going to bottom here. This is going to be the bottom. So I'm going to get in here. And then, oh, that got taken out. Oh, another bottom. Cool. I'm getting in. Nope, that got taken out. Oh, cool. So all these other bottoms, we finally have a massive bottom. This one was low 85.20, high 87. Let's see. Let's call it about a 200-point move. So over 2% rally happened here, and it got, for no reason it got bought. No good reason. We got our double bottom. It comes up, and then once this one failed yesterday afternoon, we knew we were done. But once that one was done, everybody else knew. I mean, this is where we knew we were done. This big candle failing and going short. Yesterday, we knew we were done. This is when I was saying we're not done selling yet. I was saying it all in here. We're not done selling yet. And then this happened and it went. And then this happened and it dumped. And then this one, remember, when the bears have a stop in, that's when the biggest, or bulls or whoever, when their stops are in, I'm sorry, this would have been bulls have a stop in. You get the biggest candle from the biggest obvious stop. So now the biggest obvious stop is going to be here. The biggest obvious stop in the markets is going to be here and here. Okay? Rumors of a 75 basis point rate cut. That's a 1.5 hour nice trade. Remember, we're in a downward trending market. So being a hero, trying to capture that, an 80R move, trying to capture a new high at the absolute bottom tick. It's not going to be pretty, and it's not going to be easy. So, you know what I say, they're not going to make this easy. Everybody in the world just saw who's active and who has a book and still has capital to trade is hearing those headlines going across Bloomberg. They've seen the tweets. They've got a triple bottom, double bottom. We got a complex bottom in place. 8,100 held on NASDAQ. We went positive. Let's see what ES has held. What key price level that somebody created. To 2850 held on ES. Okay, magic. That means 2800's in play. 24. So the big stuff happened at 25. As expected, that's where you get your craziness. Big round numbers. 8,100 held, so 8,000 held so far. Does that sound like something that's going to hold? I don't know. But the likelihood that it holds is, in my mind, is just, I don't know how long it's going to hold. But what if we get a 50 basis point rate cut and not a 75? Because you know how, here, let's just, let's just see what it is. Let's ask Google. Interest rate targeted by the Fed funds rate is currently 1.75%. September 2089. I don't think we changed. I mean, I want to be as obvious. Okay, so we are at 175. So they're rumoring that we're going to get a 75 basis points, so 1% interest rates. They're rumoring that that's where we're going to be. Cool. What happens if they do that and it's not enough, right? I'm sure the argument is not, well, we can go to negative interest rates. They're saying, where do we go after 1%? Gold broke 1600 today and still not back above it. Lots of margin calls. So the overnight margin rate on gold basically went, they upped it by 10%. So extremely levered longs over here had to take a stop today. So that's what's going on in gold. It's an artificial squeeze. These are things that happen to the market when you're sitting here looking at this saying, well, I would have bought this, right? Okay, so now we're sitting here. We're bullish. We've got the bottom. We're a little shook. President Bush is the Republican nominee, and I want to say, was it Geraldine Ferraro? And I can't even remember the guy's name. I forget who it was, but I know there was a female. Maybe that was 84. I don't know. Anyway, it was the pitch was, hey, I'm Ronald Reagan's vice president. You'll get the same with him that you got with me. Never mind this. We fixed it. Everything's good. And then we have head and shoulder pattern top. What happens once you figure out who you're electing? Basically, when Wall Street figures out that you just got 8 years of stimulus into the market, thank you, President Reagan and that government, what's going to happen next? You're going to have another, and so they figure out, okay, I think we're going to get Bush in office. We're not worried. And crap, I did that. I actually hit the down arrow, not that arrow. I hate life sometimes. I do not, actually. I love life so much. So much so I'm creating a new one. My son. I'll take a look at the 1 hour here in a second. We got about 9 minutes. We'll go through. Okay, so we've gone through all these things. Let's get to 1987 and the election. There it is. And okay, so we're in the summer of 1987. We had a bullish move. Nice. Looks like it would continue if we went above there. Doesn't. We'll go through the 1 hours here in a minute, Pablo. Love it. Thanks for keeping me going. Okay, so what does that mean? That means in October, they realized Bush was going to get the election. He was going to give you Ronald Reagan again, which means say what you will about his politics. That just means that money is going to flow into the stock market, and they're going to keep this bubble pumping. And there we go. Eventually, he takes office in '89. Iran-Contra, like all these things happened, but the market kept taking the money. So we've done 50% move. Remember, this is where drama happens, and we're seeing the drama. And now we take out new highs. Okay. So what do we learn here? What I want to point out is we had a almost 50% move in a month, and it took, so from October 87 to July of 1989, almost 2 years to get back to that high. So if we're watching what's happening in the markets right now, there are a lot of people who have the footprints of this market, and this is a big candle because what got stopped, stops got ran, so you have this big explosive candle and then consolidation. Stops got ran, and so that's how we deal with it. Okay. Hey, that's what news looks like. All right, let's go through. Let's take a look at all our currency pairs on the hourly. Dollar broke out and has reversed. High base pattern, breakout, reverse to the top of the base, and now we figure out what's going to happen there. Let's take a look at the euro. Euro just ripped all week long during this entire sell-off. Had a big move today, consolidating. What I'm saying right now is everything is a little scary. Pound is looking pretty good. Let me get my indicators on there. Okay, Pablo, the only thing on the failed vol breakout is the distance from the high of this candle to midline is not 1.5 R. We have to go all the way up to here to hit 1.5 R. So the risk reward on this one is extremely high. Not a good trade for me. That's pound euro. I'll do the pound itself, pound dollar. But let me see. Okay, yen. Yen just face ripper. So there must have been some stops ran or news. Okay. Gap on, there's an hourly gap on the yen. Those don't happen often. Intraday. That says a lot. CAD failed vol breakout. Aussie failed vol breakout. Kiwi. Okay. So what are we learning? We learned that the we had a massive move last hour, basically. Euro franc, SNB is stepping in and buying. Pound, nothing. Dollar CAD, nothing. Dollar yen, potential, but the distance to midline is too far. Maybe if you drop time frame. Let's see what's going on in Mexico. Is it still Mexico? Still ripping. Kiwi, big reversal on risk. So Kiwi, Aussie, CAD, these are risk assets. These are a Forex metaphor for going long US equity market, going long risk assets, risk off. So when these things move, everybody's bullish. Let's have a look at the Aussie. Same. Kiwi or CAD should have been okay. So CAD's doing it, not so much, but let's go to the euro. Euro's buying. So we have a double bottom here on the euro, which got bought, right? So this is getting bought, and now you need, even without the bands and the channels, it's still buy. So okay, I think you're right. Now we do have a, yeah, there is a long on the pound. Nice call. Let's finish going through everything. We got a few minutes. Okay, euro pound, same thing, right? You'd expect, so about 1.5 to the midline. So if you're looking at euro strength, pound, and then you're seeing this, you're like, okay, well, that's a potential. It's also a vol breakout. So understand that you have both a failed vol breakout and a vol breakout. So let's see what the risk assets are doing. They are doing what risk assets do, going freaking nuts. Aussie, going nuts. Euro yen, nuts. And remember, the lowest interest rate is the yen. So people are going to borrow in yen at zero, whatever, negative interest rates, get paid to hold the yen, and then they'll trade around it. I think pound dollar is probably the best. Let's have a look at what everything else looks like. Okay, giving it all back. Doesn't mean anything just yet. Probably the headline that people were excited about got everybody going, but otherwise they're like, uh-oh, I don't know. Okay, bonds, nothing. Bonds aren't as excited as they were a few minutes ago. Let's take a look at crude. Potential bottom going on crude. It got to 43, 45. Let's look at the low, 43.88. Natty gas. Actually, look at this. Natty gas with the failed vol breakout, long to the midline, and there's some strength in there. That's interesting. That's a change. Gold. This is a beautiful setup. Look at this one here. Failed vol breakout, inside bar. What's the range? That is 1595, 1581, 14-point range. And we do have more than, we've got a 4R potential. So this is at least a 3R move. So this is 1, 2R to midline. And then that's where everything fell apart last night or this morning, right? This is when all the margin calls kicked in. So this is our natural, this is the natural place that this thing is going to want to go. And this is where our stops, bear stops, are going to be placed right there above this ugly ass bar here. And then it gets interesting above 1660 and all that. So a lot of margin calls happened. Finish on the metals. Copper showing some signs of strength. Silver, Platinum, Feldval breakout, straight down. Palladium, look at that. Actually, this is an interesting one. If you can size your position on Palladium correctly, because the contract is so expensive, this is just a perpetual bull market. This is just stops. People are just getting margin called right here. But they're every excuse they can to get long Palladium. Look how you got 2,700 potential target. You're trading at 2,600. Like, that's a big move. Question was, do trade correlated pairs at the same time if both setups are there? I'll find the setup that has the, I'll basically go and pick and choose the setup that I'm after. So if I'm, if I'm looking at dollar and yen, I'm going to like dollar strength, euro strength. I'm not going to be shorting, or I'm not going to be looking to, that's too strong. So I'm looking for dollar strength, and then I'm going to look for the weakest. So it would be long dollar, short Kiwi. And so let's take a look at that's just kind of quick math on it. Long dollar, short Kiwi. So if it's a mean reversion, the best one is going to be long Kiwi, short dollar. But I'm going to go find which one's going to be the most useful. All right. So we've held, there's just drama. This is what I'm saying. That was a move. I'm going to take a real quick break, guys. Actually, before I get back into it, post your questions over there for me. Let's figure out this market. Let's get ourselves positioned. Do we go home flat? Do we trade it? I'm in the zone today. Let's just keep pushing through. Send this out to other traders, who might be struggling. Get other people in the room. Let's go big today. Let's get this thing moving. Let's keep people from making stupid mistakes. Today, let's make some money. Let's do our job. Let's take care of each other here. I'll be right back. I have to double down on coffee, double down on water, and go kiss my wife. All right, people, what is up? Okay, we are, first of all, good. Got questions. All right, love it. I am with you all. I'm going to tweet another one. Let's get everybody in here. All right, guys. Got some good questions. Love it. I'm going to post this one. And if you guys who are in here would be so kind as to, we're getting some great questions. We're getting some great people in here. I love this. So I want more people. So if you could retweet that, share it out, give that link I just put in there out to people. And we can get people in here. We can get some good questions. We can get some good knowledge thrown around, and we can just keep trading this thing. I got one quick text to send, and I will be with you. Also, I'm going to put some music on. All right, music. Okay, music, please. All right, let's rock this. Yes. Pino, you're my people. Let's see what we got. What sort of music is good today? Okay, got me a little background music. Everybody hear me? A little lower. There we go. Okay. First question. Oh, first of all, let's rock this. Yes. Pino, you're my people. Bring that magic all the time. Got to go to a meeting, day job. Bob B. Peace. Always great having you here. Good, sir. Which one looks best for us to trade now, Chris? Difficult question. I hope this is not the beginning of the biggest crash, which a lot of big pros are calling since years. Don't pay attention to the big pros. They'll sit there and talk about that over and over and just complain about the Fed and do all these sort of things nonstop. And be wrong for 10 years, and then they're right for a week, and all they're doing is running victory laps. So what do? Do you follow them, or do you do your own stuff? I say do your own stuff. Liquid, find your edge, set your risk, and find out. Absolutely. Find an edge in the market. We got an edge here in price action. If we're gonna day trade, we have an edge. If we're swing trading, the failed vol breakout, the vol breakout. Vol breakout works on longer time frames. We're talking weeklies and longer. The failed vol breakout works substantially better on daily and intraday time frames. So I'll get into that real quick. Markets tend to mean revert after a breakout 80% of the time. So there's only 20% of the time when a market breaks out that it's actually going to be off to the races, because that's just too easy. And markets don't do easy things. If you've played this market at all, you understand that right now. So the failed vol breakout on the intradays and dailies is a phenomenal strategy, mean reversion strategy, high win rate. You're not trying to catch 100-point 20R rippers. You're trying to catch 1 to 2R moves. Okay. That's important. Okay. Hey, Chris, on the BTC trade, still in it. Could we review? Price went below stop, but no closes. Hasn't closed below the stop yet. You're correct, BB. I'm still in BTC. So here was the trade. And you can hand it over to the daily too, if you like, but they're both going to close at the same time. So let's take a look at as you can see, the daily, if you played it on the daily, and here is the failed vol breakout. If you played it on the daily, you did not get filled yet. And today would be your trade, a buy stop above today's high. If you're doing it on the 12-hour, then it did troll you. It's trolling you right now and sucks. But as always, I look for a close below the swing low. And the daily is going to take over for me on this trade. So that's how I'm playing it, just FYI. However you end up trading it, VB, is on you. Obviously, because you took this NASDAQ trade. And you're a responsible gentleman who takes responsibility for their own actions. And here we go. Okay, interesting. What's interesting about this chart right now? Now that we have an indicator of Bollinger Bands, these jagged lines, and the Keltner channels in here, what is interesting about this setup right now? We're talking market bottoms here. If any of you have studied that stuff, sure, we'll take a look at the Dow. Sure. But what I want to point out is there's something very interesting happening on this time frame right now. Let me clear all my drawings off because we're looking at indicators. VB daily taken over, so I will be doing a buy stop at the high of today's candle on Bitcoin. So I priced it on the 720, and now I'm handing it over to the daily to take control. So a close below today's low would be it. So importantly, what are we doing right now? Everybody wants to know, is this the bottom? Is this the bottom? Should I buy? Did I miss the buying opportunity down here at 81.25? I should have bought that. Crap, I don't want to buy it at 82.95. Come on. What's going on right now? If you using indicators, those of you who know the vol breakout strategy and the failed vol breakout strategy, my core trading strategies, those of you that know it, what is happening right now that we have actual indicators on the chart? I'll give it like 30 seconds and then I'll tell you what it is, but it would be interesting to see if anybody knows. And if you don't know and you want to know and you want the strategy, heck, Why don't you get it? Here, I'll do a sales pitch. You go here. And then here's the two things that you should have if you don't have it. Free. You should definitely have that if you don't already. Those that do, hopefully you get use out of it. I think having a checklist before every trade, going through your checklist on every single trade and documenting every trade is critical to successful trading. And then okay. And then the profitable trading blueprint. These are things that if you're going to be trading with me, these are things you should know. The free systems trading checklist. Also, just being in this, being in here with me all the time, you're going to learn this stuff. But if you get the checklist, you already have the checklist, and you know if you're doing a trade and it's not something you've back tested and you know your risk parameters on, then you know you're gambling and just know it. And then the profitable trading blueprint, that is like $50. If you find value in this chat, in this live stream, if it's useful to you, treat your boy right, go buy the profitable trading blueprint for like $50. And, there's a 30-day guarantee on it. So if it doesn't, you get it, take all the information in, download it into your brain, get that knowledge, do the work. You'll know the FBO, failed breakout. That's part of it. That's the bonus, actually. And let me just, so you guys can see what I mean when I say this stuff. That's FVBO is the failed vol breakout, and VBO is vol breakout. Those are my main strategies, okay? So for those of you who don't know what I talk about when I bring that stuff up and don't see what I see right now and understand what's happening right now in this market, if you don't know it, you should definitely consider, hooking your boy up. David, 100%. And I know you have done a number of my courses, so thank you, good sir. And exactly that. We have Bollinger Bands inside Keltner channels. That is a vol compression. So what happens when you have volatility compression? What precedes or what proceeds? What do you see after you get volatility compression? So in volatility expansion, you're just gonna fly, right? That's volatility expansion, like we see here. Volatility expansion, it just keeps ripping. And then we get compressed volatility. So what do we get here when we have compressed volatility? Compressed volatility. Understand also, look at the time frames of these compressed volatilities. They happen during overnight hours, okay? That's when vol compression happens usually. And if you were to take the overnight hours out of this is just a straight, and in fact, I can do that with the Qs probably. This is just straight selling all the way at the bottom band. So we had actually okay. This is a great representation. So we had compressed volatility at the top around Valentine's Day, huge compressed volatility, massive compressed volatility. Look how compressed that was. Okay. And then we blast out. So exactly right. You get a very tight range when you have compressed volatility, and you get a massive expansion. And the first move is not always the last move in that expanded volatility. It's just volatility. So we had this big blast up, we go down, and now you notice the Bollinger Bands are outside the Keltner channels. That's an expanded volatility range. And then it just kept boom, 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 boom. And then Monday happens, and here we are today. So that's why this is interesting. Okay, when we get compressed volatility, like we got yesterday, compressed volatility, we shot in, and then what happened? Boom, dumped. Compressed volatility. Notice that the compression happened at that big reversal yesterday too, right? So compressed volatility, that big reversal today, and then we dump. So what I'm saying is get prepared. Something interesting is about to happen. We just had this big move. We now have compressed volatility, and everybody's sitting and waiting. Sven, I had a question from you, good sir. I think, sir. You guys know what we're talking about here. I love it. Again, go to the website, like me on, or follow me on Twitter. Get the free checklist. It's free. You just click it and you're going to get a bunch of emails from AK probably. But it's good stuff. He's a good writer. And then if you are into it and you want to know more about the volatility breakout, like this is my business, the volatility breakout strategy. That is my business. And do you think anticipate to that volatility has no edge? It's like gambling. Trying to guess which way it's going to go is gambling. Waiting for the setup and the confirmation, that's where the edge is. Okay. We know the volatility is going to happen. We can't do, it's too expensive to buy calls and puts doing a straddle right now. Because, implied volatility is extremely high. So trading the options is just a tough way to go. Putting a buy stop above here or below there just means that, you're gambling. You have to wait for the confirmation. So we got the close here on this one. So it was compressed volatility, closed outside it here. So you get short here, and then you can exit on a close inside or a close above. Usually the way I do it is I trail stop it here, here, and then like a close above the midline here, because you're already in. At this point in time, 1, 2, 3, 4, 5, 6R runner on the compressed vol. So you don't know where it's going to go. Exactly. I had a request on the Dow. Let's pull we know what the volatility bands are looking like. Let's pull this out. Okay. This held. Everybody's thinking this has to hold, and it held on Dow. So they're buying it at these levels. We'll see this on all the markets. That held. When this one failed, it triggered stops. You'll see, remember, every time we have a stop run, you have a big candle. So every stop run candle is large. And you'll see when this one, so this had 1, 2, 3 big stop runs on this candle yesterday. And so that's why it's such a big candle, being down almost 5%. Well, it was a 5% move total. And then finally, we had this line in the sand here, which got ran. And then there's nothing left. Outside of that, like it's this until we go below. Like these are okay, but this is the big bottom that held. Okay. So they're really looking. Simon, yes. My people downloaded, pay for the blueprint. It's so good. I'm so glad. Love it. I know you did that like 2 weeks ago, I think, right? So, okay. So now this is that last, there's kind of a little bit here too, potentially, but this is the last low until we get into the 2018 meltdown area. Okay. And that held on the Dow. So far that's looking pretty good on the Dow. Let's take a look. I know you're here to see where the bottom's at. See how complacent this was up here. See how volatile this was here. Remember, we closed those, we broke through a lot of these stops. And so that's why it got so violent yesterday after the close and everything. They tried to bounce it yesterday and they couldn't, and it dumped and it killed everybody. And today they're trying to bounce it. We've got a complex bottom forming. It's there. We had a complex bottom here. Right. And they got long here and they got stopped out, and long here and got stopped out, and it just dumped. Sasha, thank you. I know you've done a lot of great work on the system. Sasha's done a tremendous amount of back testing, making that system his own. I don't think you're just doing my stuff directly. I think you're actually doing your own version of it, and that's exactly what you should be doing. So what I'm talking about here, what I do is the way I see markets, and the way I see markets is how I trade markets. Okay, look. So finally we have, this is a very stressful place we're at right now. Dow put in a strong rally overnight, killed it, and then rallies back here. And it does not close. So it goes below that swing low. So it's trolling people for sure, but it doesn't close below it on the 4 hour. So longer term traders are still bullish, and they're going to have buy stops above here. Bears are going to think, okay, stop here, stop here, stop here, which you're going to want bears to have to stop or to cover their stops or their shorts, right? Because that's how you get rallies. And once that happens, you get fast snapbacks, because bears were, pretty chill when they were shorting up here, but now that they've locked in 30,000, let's say almost, let's say bears get in here, 28.57 down to 24. So 500 points, 400 or 500 points in shorts. At 100, they're like, yeah, whatever. I'm sorry, 1,000, a couple like 5,000 points. At like a couple hundred points, they're okay. At now, they've doubled their position, and they've done okay. This is held. This is held. This is held. Every baseline has held. So this is held so far. Now, if we get another dump, this becomes those levels. So I'm not seeing a bottom yet. Everybody is seeing a bottom. Everybody right now who's sat through this so far, everybody is seeing a bottom. Everybody is saying, you know what? The Fed doing what they need to do, that's bullish. We know they're going to intervene. We know they're at least listening to us. So some shorts have covered. So you get a bottom. Some longs, a lot. Now understand this. If you're tuning in wondering where my long should be, it's because you've been conditioned over the last couple of years, especially since the 2018 low, that these sell-offs get bought, and you want to be buying these because they're massive, right? You get long at 28.6, and that thing runs to almost 30,000. So like 2,000 points move. You've been conditioned for the last since obviously this is forgotten. The 2018 bottom is forgotten, but you've been conditioned to buy these longs, buy these dips. Every dip gets bought. And so right now, the Fed's paying attention. They're going to step in and do what they need to do. They're doing all this sort of stuff. So, and now we're just seeing bull bar after bull bar here. So we have, let's take a look at what we have here. This was the buy that some of you got into here. Now understand what we have going on is we have line in the sand, bulls taking a swing at it here. Some of the more aggressive bulls have put stops right down here, thinking we have a bottom in place. The Fed's stepping in. The government's paying attention. We have our safety nets because the Fed's been doing this forever. So let's see, it's worth a risk of, 1R, maybe even like, one micro contract. You buy one NASDAQ micro contract here. This is a complex bottom. Complex bottom, David, I mean, you could call this a double bottom. I don't know. I textbook speaking, I don't know how to say what it is. All I know is that this attempt at stops got ran, and they got stopped out. Bulls got long here and got stopped out. Bulls are long here now, okay? And bears got some of the more aggressive short sellers who've been shorting all week got stopped out on this big candle. And now news is starting to come out, and we're probably, let me just take a look at my Twitters. I see somebody is asking about VIX. So let's see what the market is saying. Further, James Bullard says rate cuts possible only if coronavirus turns into pandemic. Okay. Gold sees its biggest one-day drops in 2013. We've already seen that. Now, more mainstream media are saying, like people who, political people, when one thing I learned from 1998, 2001, 2008, these are people who have those footprints in their mind and they have millions of followers. One thing I learned from 98, 01, and 08 is that winners are bold when everyone else is afraid. When everyone screams sell, buy. Great advice. Who's following it? Now, think about that. This is a big retail guy. I don't mean retail. This is a big media guy. He's big political thing. He's, he's not mainstream media. He's like, I don't know, alternative media thinking, think like, big Twitter followers, has the YouTube channel, probably live streams, telescopes, all that. When he's coming in saying you want to buy, that's going to start getting retailers saying, okay, I'm buying. So that's interesting. Now, remember, we have these levels to pay attention to. So we have 87, let's call it 8,800 down to 8,100. So half of that, 700, 350, 80. We're right in this general area here. Okay, perfect. So remember, we like to get, when we get counter trend moves, we like to get a 50% or so area where this spike low, where yesterday's buying was today's selling. So that's distribution. What does that mean? Money is getting back redistributed. People are selling a little bit more here than they were. Let's take a look at the pound we saw earlier. No fill, still kind of setting up. Okay, Jeff, do you have anything to say about the VIX? I really don't trade the VIX, but that doesn't look like people are. It looks like people are buying. When that news came out, this went down, but it went back up. I'm not seeing a reason to get to buy the bottom yet. Jeff. VB, for news updates, do you have something specific on your Twitter? No, I don't. And I don't use news. I don't use news to give me information other than I like to see what is being said so I can understand, okay, what are people paying attention to? Why are they freaking out? Why did we get this bounce? What is the commentary? Because I know that the commentary is going to drive some of the, I have to figure out price action. So no, I just go to my Twitter, the main feed, and see what's interesting there. I don't trade off of news. I knew that was going to, I know that this was going to cause a spike when they start saying, yeah, the Fed is going to cut. And we saw that. And then now they're like, okay, so what if they don't? Okay, now 38% chance of a 50-point rate cut. So above 29.20, people are just throwing random numbers out here. People are just throwing random numbers of where the market should be. Let's see. I'm trying to see if there's a lot of people talking about buying. UK's government, coronavirus, top priority. 20%. Ooh, Apple dropped 20%. Interesting. So we got from 327 to 256, 175. That's a 20% drop in Apple. That's interesting. That's going to bring buyers for sure. Okay, so here's my thoughts now. For news updates, okay, so I answered that. Buy when there's blood in the streets, sure. Warehouse is selling to retail. Yep. So so now everybody's talking about this is the dip, this is it, this is the one. And people even had, so this is that setup, boom, boom, up, rip, pull back, and we tested the high here, and that's holding. So we're looking to get back up. This area right in here, this yesterday's low on the NASDAQ is going to be today's resistance, 85.20. Let's take a look. On the S&P, that's going to be 3,006. So 3,000 is obviously going to be, you know, a target that everybody's going to try to close the week on. Actually, this is going to be an interesting one. Let's pull the weekly chart and see what it looks like, what the week is going to end like. We have a monthly chart ending here as well. So that's what our week is going to look like on the charts. And then update the monthly here tomorrow. So this is our last candle of the month. What does that look like to you? Is gonna look like, unless you can rally it back up into here and up into here, which is possible, totally possible. We're gonna print an ugly candle, and they're gonna be begging for something like that. But so this is kind of what it's going to look like here in my mind, that sort of candle ugliness. Comparatively, you could probably go back a lot further back, but that's about what we're looking like here, though we want to see something more of taking out this high. So let's get to a space where we took out, that was 2008. So this is what they were hoping to get. And this is what we got instead. All right. Okay. Okay, so this is what a bottom does look like. Definitely, for those of you that took that long from here or got in on the dip down to there, this is what a bottom's supposed to look like. The thing about it is, when it looks like this and we have that and we're going into the weekend, it just could be crazy. How did we do? Okay, there's that potential bottom forming on that one. On palladium, let's see if from what it seems like right now. Okay, so the franc is being bought, or euro is being bought, SMB. So there is intervention out of Europe. So Bruce, if you're in the room with us right now, he just posted. Bruce is he's been trading for 25, 30 years. Former floor trader. And something he pointed out, and this is something that we got into. So he traded 1987. He's one of the people that has that footprint because he traded it live. He traded 1987. He traded, 91, 92, 97, 98, 99, 2000, 2004, 2000, or 2001, 2000, he's traded all those. So he has all those footprints on his mind, and that shapes his perception to the market, much like I have all those footprints on my mind, and that shapes my perception. Some of you have a lot of those footprints in your mind too from the different crashes or trading different markets. And so that shapes your perspective as well. Something that he wrote, and I'll share it here. One of the seldom discussed amplifiers with the 87 crash was failure of NYSE systems to be able to handle the volume. Stock tape was 40 minutes behind, and dozens of stocks were closed by the specialists. Okay, so what I want to point out is that at that point in time in 1987, there were humans. This was the screaming and yelling, and machines were not doing very much of the trading. However, machines were the hedgers. That was an interesting thing. Futures markets were working fine, but ARBs were taken out of the market since they didn't know where the prices were, right? So you're like, long GE, it's going down, so you sell S&P 500 futures to hedge it, but you don't have a price. The potential buyers were removed from play and selling overwhelmed everyone else. NYSE upgraded enormously afterward, but they also squashed the commentary about the problem. So some of the things that some of the things that are common, and yesterday we had this problem too. Some of those things what happened yesterday, the Toronto exchange, was the TMX, is that the Mercantile? I don't know. The Toronto exchange yesterday closed because there were just too many orders flooding the system. I'll tell you this, when Flash Crash happened in 2009, 10, 11, whenever it was, probably 10 or 11, it took 45 minutes for my digital quotes to update on my screen. So we're talking, Bruce is sitting here talking about 1987. It took too long to get your quotes updated. This was 2000, let's just call it 2010. 23 years later, and the internet existed, and all sorts of people were in and out and trading live. And it took me 45 minutes to catch up to the quotes. So this is something that happens when you have crazy volatile markets like we have right now, is you have systems breaking down. The systems that are supposed to run and take care of you die. Okay, so we have a bar update in about 15 minutes. Let's have a look. Failed vol breakout on gold, and you're darn right, darn tootin' right we do. So that would be a buy stop above here. So boom, with a nice multiple 1, 2, 3, at least 3R move back. So that's 1R. Oh, so that's a 2R move to midline is all. His name's Bruce. What do you call it? Pablo. Sometimes he's in here talking with us. So I am not convinced that we have a bottom in place yet. No, not convinced of a bottom yet. Not convinced. Compressed volatility. We're going to get something before the end of the day. Something wild is going to happen. Guarantee it. Pablo, I won't because I'm already in it on the monthly. So I'm not going to day trade it, but that would be a long trade. Yes. Crude looking interesting here on this inside candle hourly. except that it's just so far away. Crude caught the fever. Silver. I answer that for you, Pablo. VBS, what am I looking for? Okay, so I don't have a definitive answer for you. If you're tuning in just to get an answer from me specifically about what I'm looking for, and if this happens, I'm going to go along the market. I don't have that. Right now, we have a tradable bottom. They're working on it. I say that Dow holding its 2019 low is good. And we're holding our barely back to December of 2019. So 2 months ago, December's low. We've held that. There's still a lot more to work off of. That would be our line in the sand. But we broke out here on, this is the breakout, 8,000. So 8,000 is still something. It's in my eyes. So I'm just not looking at this as a trade or as the bottom. So if you took that long, most likely you're remember on mean reversion trades, we want to be exiting at resistance, and we want to be taking on a mean reversion. You want to take 1.1, 1.2, 1.5 hour trades, take profits at, when you've doubled your thing. This right up in here where we topped is where you would want to be doing that. So it's tradable. That's it. Yeah, we may, and so yes, we may get just a snap bottom and rip to the top. If that happens, cool. We'll go back to work next week. Right now, everybody is holding on to the notion for the next 3 to 4 hours, we're going to get a Fed intervention or something intervening. No doubt about it. It's Friday. We've had a 10% sell-off this week. Everybody's scared. Coronavirus is scared. Everybody is expecting something to happen here, right? So if something happens, then you need to measure, okay, it's not whether you think it's right or wrong, it's what the consensus is thinking. So what is the people with the money that are trading this, the people who are going to put their money back to work in a big way, the big central banks, the pension funds, the big hedge funds, the small hedge funds, everybody, what are they thinking? Is that information, is a 75 basis point move enough? If they think so, we rip. If they don't think so, then what do you think happens? Sven, here, I'll show you. Systems trading checklist right here, christover.com. Click on that. It should take us to unless I have to go update all the links again. There it is. Get your free checklist here. and do it. Join my email list while you're there, people. All right, so we're closing the hour here in about 7 minutes. What does a 2 hour look like here? Let's take a look at what a little longer term traders are seeing. That's bullish. They're seeing that as bullish, I'm sure. Longer term, seeing this and saying, okay, we're bouncing, but I'm still not confident that we ripped and then we came back and it's still just a major downtrend. So as we go up in time frame, we can see that's what bigger money people who are going to take bigger moves, they're going to be seeing. Okay, so now on the 720, we have a vol breakout and potential mean reversion. Like this thing can still rip to 91.88 and still be extremely bearish. Just say everybody right now, everybody is bullish this market, or is either curious about this as being the bottom. A lot of people have bought the bottom with a small position because everybody wants to say, I bought the bottom. So their ego wants to be into this one. There's no safety here. There's a little bit of safety, I should say. So we've banged around and we haven't dumped like we've been doing all week. We haven't dumped yet. And it's 3 bull bars here since the open. And we have compressed volatility. So now, knowing that we have compressed volatility, we know something is going to happen. And if we don't get enough news that's bullish to say this is the bottom, everybody's going to close any speculative longs. They're going to stop out of positions into the weekend because they're going to be scared of headline risks over the weekend. Some people may be long into the weekend. They'd be like, if ever there was a spot to be long, it's here because selling was everywhere, So Sure, Sven. Where's everybody from? We got a good group in here today. Where's everybody from? Currently, I am in Scottsdale, Arizona. No longer a nomad. I actually have a home base. I know we got people all around the world. I know we got a bunch of new faces in here today, so it's kind of cool to see where everybody's coming in from. And where's the pound going to end up? So we're going to have a tighter risk range on the pound now. However, we have a vol breakout on the pound and a failed vol breakout. So let's have a look at the pound real quick. So we have a vol breakout in the money, another vol breakout, a lot of David, Tampa, Florida. That's right. Sunny Tampa. Brooklyn, AT. That's right. So Ethan and AT are the Brooklyn New Yorkers in the room. I don't know if Ethan's in the room with us today, but he is leaving New York and coming to, what do you call it? Moving out to Scottsdale to trade in the Trading Thunderdome here. Okay, Vegas, cool. Father-in-law's in Vegas, Joe. Aberdeen, Scotland. Oh, right on. Very cool, Sven. That's a cool spot. Singapore, VB, love it. Haven't been to Singapore in 20 something years. Okay. Updating. All right. We're waiting on some news to break us out. We're going to wait on some news to break us out of our compressed vol regime. The first move might not be the real move, but so far we're putting in what's looking like an attempt at a bottom. 3 bull bars, obviously getting above this yesterday's low. Reversal low is going to be a big A big job for the bulls still. Topping pattern on bonds, 30-year. Let's take a look at notes. Same. Okay. That's what we're looking at. Bullish still, but remember, we've got compressed volatility in here, and something big has to happen. So that's going to be a big move out. It doesn't just kind of, to break out of compressed volatility, you don't just trickle out of it. It's big neck breaking type moves. It's very emotional. Again, though, that doesn't equal just because that's the first move doesn't mean that that is the move. Coronavirus crisis will prompt only modest cuts from OPEC. High stakes of Guyana's election. Winners of March 2 will have the opportunity to use the country's newfound oil well to entrench their political future. Interesting. Guyana. Okay, geopolitical calendar. What do we have coming up this weekend? This is going to be interesting for those of us. Okay, hourly close now. Top of our compressed vol range. Nothing interesting. Today, we have geopolitically the U.S. to hold deputy level cabinet meeting on whether to increase U.S. export controls on the sale of goods to Huawei. China's finance minister to begin exempting 65 U.S. products from retaliatory products. Okay. Thailand parliament to vote on a motion of no confidence of the prime minister today. Interesting happenings in Asia. U.S. and Taliban signed peace deals, sub-Saharan Africa, Guinea national election. So that's kind of what we got going on over the weekend. Nothing scheduled. So what do we think about that? If nothing's scheduled to be volatile over the weekend, the only thing we can probably have is intervention of some sort. Now, if Fed steps in over the weekend, do we gap massively higher? If we don't gap here, or if we don't get that bottom here? All right, we have some really nice, look, this is actually interesting. So this is more information for you. It's just been trickling higher. Let's see what yep, huge gap on Monday if that happens. All right, so I had we had a big order at Costco. Okay, so yeah, we got our stockpiling order from Costco, and so just got that delivered. Because you never know. And since we're just moving in here, it's not bad to have the stockpile, right? All right, so here's the thing. This is the most craziest, wildest day, and is, you know, I don't even. I'm gonna remove. I mean, we know they need to be there. So let's remove our. So crazy wildest day. Actually, I'm gonna keep them on. Crazy wildest day of the week, because, right? We just sell off. This is the, 21, 20, 19, 20, 21, 23. Okay, so we open here on Sunday. Yeah, it has to be Sunday. We've already been selling, and it's just steady. So this is vol breakout. Boom. Any one of these. Always in short all week long. Every dip was being bought because everybody was conditioned to get bought, and it got face ripped. Compressed volatility overnight, opening, sell, compressed volatility here, and we up, and it just started. We had a lot of room. When you're at the top of the range of compressed volatility, you have a lot of room. When you're at the bottom of the range of compressed volatility, you have a lot of room. So we went to expanded volatility, really big range. So the range, let's see, coming into today, let's call it at the open, 8 a.m. Our high was 83.60, no, 86.48 and 80.89. So 600 point range. 600 point range down to now 84.70, 81.63. A 300 point range is what it is right now. So we started at about an 800 range, 700, 800 range. We've cut that in half. Compressed volatility. If we're at compressed volatility on both top and bottom bands, that's a turning type of scenario. That's one thing you need, but that's not what, that doesn't mean that we're going to turn. Now, we've moved from bull quiet to bull volatile, quiet, volatile, and we've dropped from a high of 275 down to 0.89. That is massive volatility pullback. And that is capitulative, but not really. I need to add a Q always, not just one. Okay, so one thing we'll notice is on the open, we gap down on massive volume. So this is an indicator here. Our volume was 31 million on the open. Yesterday's volume was 22 million. 17. So we've averaged that, and we did like that. That's what you get on this bottom was 10 million. So we have definitely, actually, let's go to daily. So this is 2018 Meltdown. Just to put that in perspective, look how many times we did more than 30 million. This is 100 and gosh, I hate that so much. 116 million shares on one day. Yesterday we had 90 million. Today, and we have a big green bar, 70 million. So what is this? Big green candle, big bull candle, capitulative volume. That is boom, boom, boom. That's capitulative volume for a turn. Doesn't mean it is the turn by any means, but that's what turns need, is capitulative volume. And then you need more volume. Yeah, we've got a lot of water. A lot of water. Got a lot of rice. We got a lot of beans. We got a lot of durables to survive if, the world does come to an end. Gold's dumping harder again. Pound's dumping. Something's about to happen. Something is going to happen. Something's going to happen here in the market. I think they're manipulating. Well, I don't know about manipulating, but if gold is dumping off this low, this far down, and now we have compressed volatility, this is where it gets interesting. Very interesting. So news should be coming out here shortly. Yeah, I think something's going to happen. I think something's about to drop. Whatever they're looking to do, this is about when it's going to happen. In 45 minutes, remember, we have the 4 hour, the 2 hour, the 1 hour, the 30 minute, the 20 minute, the 15 minute, the 10 minute, the 5 minute, the 1 minute candle updates, just like 8 a.m. Or 10 a.m. does on East Coast time. So it's a 4 hour candle for futures and Forex people. That's very important to see. And that's usually a place where things tend to you get a bit of a readjustment of positions. So you'll probably get 4 hour traders looking to, if they're looking to go long through the weekend or short through the weekend, that's where they'll enter their trade. But most likely in this scenario, a lot of people are going to take positions off going into the weekend in the next 45 minutes or so. That's something to just keep your eye on. Not that that happens all the time, doesn't have to be the case. That is definitely a situation. This is where stuff is going to happen. I want to say that. This is where gold dumping hard. Risk assets dumping. Euro franc done with the bid. Something's going to happen. I'm just telling you, this is where this is it. This is where the volatility is going to show up. Something's going to happen here. So if you were long from our buy earlier, let's go to lower time frame, see where we're at. I mean, the 10-minute trade was the trade, getting long on that one down there we talked about. That was right at when I got live. I didn't call this trade out or trade it myself, but yeah, that's a beauty. What we're seeing, 10-minute, good bottom here. Big spike up. Mm-hmm. It's happening. Something's going to happen here. Something's going to happen. If something doesn't happen within the next, well, before the end of the day, of course, they're going to dump this so hard, which could force a buy. That could just force a buy program, I guess. But so I'm waiting. Everybody's waiting for that to happen. What up, Will? Morning, Chris. Pairing dudes got me a late start. Did you cover? Yeah, I did the 80s today. There is nothing happening right now. So every single trader, everybody is sitting here just waiting for the Fed to step in. They are waiting for something to do this to the market. Do something to the market. Everybody's waiting to buy this dip. That is absolutely what is happening right now in real time. We are watching it. Everybody has the same thoughts. Is this the bottom? Is this the bottom? A couple people took some stabs at it. Bullish sentiment hit 9% yesterday, up down from like 90% bullishness. December 2018's at the lows, it hit 4%. So December 18 low, the market was down gold dumping. Gold just dumping hard. They're going to force something with that. That's going to force something. It's a little different today with obvious negative news then and now as well. This move is the first of 5 waves down versus then as there were 5 clear waves down into December. My view is also if you're caught on this, caught out in this and the wrong side upgrade to some higher quality companies that have been crushed, if trading for a bounce or even if you're short, keep your sizing smaller than usual. I'm on a plane. We'll be back Sunday. Good luck. Euro Franc on fire, huh? Something's happening in Euro Franc land for sure. Yep. Pound ever do anything yet? Nope, just dumps like gold. Gold getting bought a little bit. Started growing a mustache. We'll shave after the bear market ends. How can we know the bottom is the bottom? That's the question. Before it's the bottom. ATM SPX trial for today is 43-ish. Last week at this time, it was 7. Yeah. Yeah, everybody's buying protection. Think about that. Now, if you've got longs, you've been in the game for, I don't know, 6 months. The other thing that could have done is you could seriously be sitting on some major put. If you're long puts, you could be sitting on some major profits. It's just a mess right now. It's a mess. This is absolutely a tough time to be in the market. It's not easy for anybody. Anybody who says it is easy is a nut. Don't believe them if they're saying it's easy to trade these markets. It ain't. This is hard. You can be wrong. You can be right, both long and short right now. But what the biggest risk we have right now is that people are sitting here positioned to be long, to be short, because they think about this. The whole world is expecting the Fed to step in right here. And if they don't step in enough, it's going to hurt. And they're going to have, everybody's going to have the whole weekend to complain about what they did, whether they stepped in too hard, whether they stepped in too little. There's a lot. Course correcting is tough, for sure. Let's see what's going on Twitter. Bobby, that Euro Franc is on fire, Chris. Macro ops. Oh, I see. No. What's with the Bob, the asterisk macro ops? Well, yeah. So everybody's expecting the Fed to step in and do a massive rate cut here and pump in a bunch of money for this coronavirus thing. If that doesn't happen, if there's nothing that steps in right now, they're going to close this. They're going to close on the lows. $3 trillion has been taken from the market. Tim Cook's talking it up on Fox Business. Is that what she's at? Liz Clayman, is she on Fox Business now? Fox Biz, yeah. Formerly on CNBC years and years ago. Yep. Watch for some wink, wink Fed policy headline to try to prevent another margin call spiral this afternoon. Yep. I stopped out on gold. Trail stopped on gold, by the way. So I am completely out. Oh, I didn't see your, Bob. I didn't see your message. About macro ops. Bob, yes, he did a will be sad rewatch later in replay. Bob says Euro Franc is on fire. Chris, macro ops, just fixing spilling from earlier, commenting regarding Tyler. I don't see where you're talking about macro ops. Also, yeah, I work with macro ops. Actually, that's where we're going to be doing the chat. Just so you know. So when we start going liver, it'll be through macro ops. Okay, so now we've successfully bounced. Now bears are starting to get a little more, bulls are getting weak. They thought they had it here. So this little low here, low of 82.95, 82.91, right? Low 82.95, 82.9. Okay, so we broke below this. So bears or bulls got stopped if they were trail stopping, because that's break even long. So we had a little drama here. And now bears are going to start kicking up the fight a little bit. But look, we have compressed volatility. News might have hit or something. Yeah, I don't know. Maybe it wasn't news. Maybe it was just kind of bouncing the sell stops. So what's interesting is this a move below here would have been where bulls would have kept their stops and bears would have been saying, aggressive traders would have saying, okay, I'm going to move below there. I'm going to get in. So now we get that volatility spike in price. We're still inside compressed volatility. So this would be a move to here, or, just banging around inside the Bollingers. When we have compressed volatility like this is where big volatility emerges. Here, once we got below it yesterday, it took off. So if the market doesn't get Fed intervention by the close, this is going to dump hard into the close. Because that's what everybody right here who bought this and is holding on is looking for. There's still plenty of bears that got short here, that got short here, got short here, got short here, and maybe even up at the top. There's a lot of bears down in here too. I mean, I know a couple of people in this room who shorted and are short, and as they should be, they're in very small positions, I assume. But you had a really nice failed vol breakout there. That's just too risky. Should probably look for a 5. Doable. And now we're down to the bottom of the range and catching a bit of a bid. 10, we still got plenty of room to go. So that's a lot of pent up volatility. All right. Google employee tested positive for coronavirus. All right. What I want to point out here, gold found a bottom for now. We've got lows in to watch, and they're dumping it now. Whatever the news was about the Fed stepping in, they're starting to not believe it because it hasn't happened yet. Remember, we have 19 minutes until the end of the hour. That's going to be a 4-hour, a 2-hour, a 1 hour, a 30-minute, a 20-minute, a 15, 10, 5, 1 minute candle update. Lots going to happen in about 15, 20 minutes. If this candle, so now we have the top, the pullback. This is typically what happens. If we can get a reversal, if the bottom holds, or we can even troll it but come back in any of these candles and get buyers stepping back in, other buyers are going to start to say, okay, the bears are stepping up, but they just can't hold these bearish candles. Right now, buyers are very weak hands. Bears are a little confident because we've had these reversals intraday that ended up dumping later in the day. So bears are a lot more confident with their being in short positions, especially ones that have been in for a while. So in Italy, scientists are saying that the virus is mutilating from person to person. So it's going to take 2 years. That's probably the news. It's going to take 2 years to actually find finding a cure. What do we get? Low 15. Ooh, beautiful. Let's take a look at what we got on gold. I might be looking to get long gold. Will, no, I'll definitely hold my FX positions over the weekend. Yeah, I got no problem with that. But it's because I've been doing this for 20 something years and I'm comfortable with what the market does when the market's closed. But I mean, there was a time for sure. There was a time for sure that I wouldn't hold positions over the weekend. Absolutely. 45 minutes coming up. Dumping the pound hard today. Oh. No, that's fine. Yeah. It's going to take some work to get comfortable with it, but doing the back tests, manually going through it, even though you're not living it live, you are reprogramming your mind. You're rewiring the neuroplasticity in your mind so that when you see these setups, you're comfortable with these setups and you know what's happening and you're not freaking out, right? That's really what one of the big reasons. Okay, pound caught a bid. Nice trade. Nice setup on the pound. That's interesting. Very interesting. Let's see they're dumping it hard right now. They are dumping. Bears are in control again. Gold. I will say we have a When will I be doing a podcast with macro ops? I don't know, Bob. Can we focus on gold a bit? Yeah. Failed vol breakout on gold. Let's just have a look. It's just ugly, just an ugly sell. This is the level you want to hold if we close this week. There's a lot. There's a lot going on. Gold, a lot of they changed the overnight lending rate or overnight margin requirement on gold, and so everybody got stopped out, and that just triggers your stop orders. I can't really comment too much on gold at the moment. I trail stopped my longs. I got stopped out when they adjusted that, and so I just took profits, walked away. Definitely nowhere near the high, but it is what it is. Do I recommend particular order for back testing? Just copy your trading view list and start at the top. A particular order? I don't know what system you're back trading, time frames, everything like that. But I would start with the majors. So euro, pound, franc, dollar, yen, CAD, Aussie, Kiwi, and just do the main US dollar crosses there to get a baseline. And then you can start looking at mixing and matching whichever ones work. So if you have like euro USD works really well, and euro pound work really well, then you can start looking at euro pound instead of pound dollar, right? You can start looking to add different ones at all times. I'm kind of hungry. A lot of smugness out on the Twitters right now. So you're doing daily failed breakouts? Okay. Yeah, I would start with, I would go back as far as you could and back test. So go back in time and then just go back to the beginning of as far as you can get on euro and start there. So I'm going to go back. Let's see if we can go to 2000. Take you to 2001. So go back to 2001 and just start day trading this one, or start putting in your trades, and there you go. Pablo, take it easy. Que te vaya muy bien. Mucha suerte. Yeah, I would go back to as far back as you can get the chart and do up until today on every single asset you have that you want to trade. And that's it. Okay, so we are definitely we're coming close to it. Compressed vol is, we know the compressed vol is in. This big spike didn't materialize. And so far, bears have regained control, at least in the last hour, not in a big way, but in a way that is meaningful enough, at least in the next 7 minutes we have, meaningful enough to, bulls would have stopped here. Bears would have considered going short. That's a bearish pattern. Let's take a look at lower time frames and see what we got. Bears short there, long, with the buy to cover here. Trading that, no problem. On the 30-minute, 10-minute, you could have got short here with a stop above. You could have shorted that. Didn't close above. You could have shorted this, close above, if you were a bear. I think Sasha's trading it that way. Actually, let's look at 15. I know Sasha got in probably somewhere around there. You know, the trend is down. Bears are in control. This isn't always in short. That is not a bottom yet. But this is where, remember, we have that highly compressed volatility. So highly compressed volatility leads to high volatility. So low volatility to high volatility. All right, I'm gonna go get some water and I'll be back in a second. I'm not leaving until we get a close or until this market gets intervened and we got something to work with. I'm gonna cook up a nice nourishing steak. There's the CNBC News on Google employee. So now everybody's scared. Are going to shut down? What's going to happen if these companies get shut down? Right. Well, we've seen in Asia for the last, you know, in Hong Kong, first of all, a lot of people have been working from home since the protests. Right. That's been going on for a while. And now, then you have a lot of people working from home who normally weren't working from home because they were. They weren't in Hong Kong, I guess. But now then you have a lot of people working from home, not going to school. There's a lot of stuff going on out there. And suddenly now it's hitting Europe. And my buddy Alan here questions, I think he might be in the neighborhood. I don't know. But he's wondering, and if he's wondering, other people might at least be saying it, which doesn't mean that it's not going to happen, but are they going to close Google? All right. Gold is that's bottoming type behavior, Pino. Bottoming type behavior. Not saying it's the bottom, but that is what bottoming behavior looks like. But yeah, I'm gonna wait for this candle update, and then I'm gonna go and make myself a little lunch. I'm gonna go make myself some lunch, and then we'll watch. Maybe we'll get, so this 12 o'clock, remember I said, well, 2 o'clock in the East Coast to standardize our timing. Candle, this 2 o'clock candle is when everything updates. All the 4 hour, the 2 hour, the 1 hour, the 30, the 20, the 15, 10, 5, 1 minute candles all update. So you have the really aggressive traders on 1 minutes And they have compressed volatility here. A little bit of a bounce coming there. 3 minutes. This is what they're saying. They're seeing huge volatility on the 3 minute. We got some expanded volatility on the 5 minutes. We have a failed vol breakout long on the 5 minute chart, right? And didn't fill. So now this one fills. Potential move 83.50. 5 minute chart is bullish. 10 minute chart, bullish pattern here. Bullish on the 20 minutes. So the 15 is going to be that. So we had bottoming, rip to the top, pull back, and then bulls step in here and they're fighting it on the 20. So let's go to the 30. Same, bottom in, rally, pull back 50%, holds, and now we're going to get that same sort of scenario on the bottom on the hourly. See, it doesn't close down below there. We have a bullish wick-ish. Interesting. Compressed volatility on the hourly. All this is a sell stop below the low. On that 4-hour chart, on this 4-hour chart, this is a sell stop below the low. That is a ugly, remember, if this hammer is inverted hammer or this shooting star or whatever it is with the big tail, whatever name you want to make it, if that gets ran, that's bullish. That's the only thing I'm going to say. That's the only way I'm going to say this is a tradable bottom bullish. If this ugly wick turns and gets beaten, then that's bullish. Otherwise, a move below here is going to accelerate, and that may get us a little more bullish. But otherwise, there were never enough survivors for javelin catching to become an Olympic sport. Seems appropriate for bottom catching. That was Linda Raschke. Very nice. She's brilliant. One of my favorite traders. Okay, I'm gonna go put together a meal for myself. Excellent quote. If she's saying this sort of stuff, if Linda Raschke is saying that sort of stuff, you're probably not there. And probably you're tuning in to find the bottom here, right? And I'm not calling a bottom. Okay, I'm gonna go make me some food. I'll be back. All right. So I got a buy stop in on cable, 12761. So they buy stoop. I'm just going to use a stop, not a stoop. So the hourly close below 127258. So what is our risk range on that is tight range there. Looking for a target up to, so we have at least multiple R's up to the top here. 1, 2, 3 R to midline. What happened? 10-minute did not go. Let's see what the 5 looked like. 5 got stopped out. Bears have control. Bears are still firmly in control now on the day on NASDAQ. Might as well throw this on the screen so that we can dream that we were actually, let's paper trade it using one of these amazing providers, and we could trade it through TradingView. Trade, so it would be a buy. Where's my order? I see. It's just not participating with me. All right, so let's go ahead and place this trade. In our paper trading platform, so we can practice this and monitor along with what's actually happening in the markets instead of having it on my side screen over there. I'm going to track along here so we can watch it in real time. Clearly this is paper trading. This isn't real. This isn't live. I am trading it live in my other account, in my account that's not on the screen on purpose. Purposely not on my screen because, well, this is more entertaining than watching order entry. I will guarantee that. Okay, no news yet. Time for lunch. Okay, looks like we got filled on our paper trade. Let's see if I got filled on my, okay, I'm in. Anybody else, if they're trading along with me? And okay, NASDAQ, that's a bit of a bullish formation. Remember, we want a failure here. This beautiful short setup, we want it to fail. That'll signal bullishness, but it's not yet. And we've got a couple hours. There we're getting it. We're starting to get that, boom, 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 higher lows, higher highs. This is how you start to turn the trend. So pay attention. Compressed volatility. Whatever happened, this little news bit right here that ramped this up, it's interesting. I don't know if there's anything. NYC says it's unable to test for coronavirus. So there might have been some news there. Probably 20 or 10 minute. Nice trade. Vol breakout failed and now is ripping on the 5. So we attempted, didn't do it. Another one, 1, 2, 3, 4, 5R long. Let's see what's going on with the pound. Trading off the 60. Got a fill. Just kind of paying attention. Nothing going on yet at the moment. I don't know if there's news that's causing that move yet. So in Zurich, Jeff, I don't know if you're in the chat here, but he just shared, he's in Zurich. We've been ordered that everybody should install their cloud OS on their private devices as well. So they're basically saying if the government may shut down public travel. So get yourself ready so you don't have to come in the office. So far, so good on this trade. If you are doing the pound trade with me, it was like the second trade this week, first trade this week for me. No, I had an Aussie dollar. Yeah, an Aussie dollar long. I got pound short as well, or pound stopped out long on that one as well earlier. This is a nice potential move on this one to catch up. Nice bottoming pattern. Again, though, if this sort of pattern fails, that's very bearish. So that is a big buy signal. Let me just turn this into a 2-screener. So we got 2 things we're trading today, and it's not gold. It's NQ. Press vol there and a nice trade on gold. Whether it stays or not is still a question. But BRB. All right, well, we got the move, didn't we? NM, yeah, I got long pound here, up 1 hour already. So doing a little move on pound, and so far working out well. So compressed volatility happened there. Still waiting on that. I guess Powell's talking or something. So the dollar is going to drop. Take a look at bonds. Oh, bonds are going higher. Huh. Crazy. Gold starting to bottom. So something's happening. Lunchtime for me. Probably going to have to try not to eat in front of the screen too much. Apologies. So first profit target we're going to get is 128,521. I'm going to raise raising my stop to break even here. So let me add that to the, or I'm going to bring it up to here. So it would be a sell. Actually, let me enter it in my platform. Low. Actually, I'm not going to do it yet. For on the candle close, basically I want a candle close below this hour's candle. So the markets are starting to, the currency markets are starting to get it. Not much else in the markets. Let's see what Euro pound's looking like. Euro pound starting to reverse. Euro up and running. How's Euro franc doing? Lots of drama. See if Aussie's starting to get a bid. Aussie's getting a bid. New Zealand's getting a bid. CADs are dumping. CAD's getting a bid. Let's see what's going on. Equities, nothing yet. Nothing really, just tight momentum. Bonds are ripping. Oil's bouncing. Gold is holding the bottom in. Silver's starting to bottom. Platinum, palladium. See how our softs are doing. Lots of volatility going on in the, okay, so the commodities all getting a bounce. Something's going to be happening here. All right, we're hitting pretty good move here. That's one. We did. Let's. We've got 1.1R, 2R's in range here, 3, 4R. So I would trail stop. I'm not trail stopping yet, Will. Right now, my stop is a close below here on the hourly. If we close up here or we hit 2R, then I'll go ahead and raise my stop. But let's see what happens right now. It's, who knows? You could definitely trail stop at break even. You could take a little bit off at the 1.2 2R. Huh. Kudlow says people should buy the dip in the markets, huh? That's what the... Kudlow says 10-year yield 1.14%. Kudlow says people should buy the dip in the markets. Yeah. He did say that. He said it. He said buy the dips. That's the first time we've had that when you got the Fed saying we may cut rates. Somebody's rumoring they may cut rates, whether it was the Fed that's actually doing it or not. Whether it's the Fed actually doing it or not is another thing. But when stuff like this happens, all it is messaging, right? Like you're saying, Bob, right? All it is messaging, and that's saying, hey, we're going to start throwing things at it. Now, the thing about it is this administration, if they go out and do something like this and then they get a Fed cut and we rip, they're going to, that's going to look beautiful, right? So they're going to, next time, that gives them fuel so that next time if something bad's happening, they come out and they do a tweet or they talk or something like that and it rips, people are going to believe them. So there could be positioning, that sort of thing. Who knows? Anyway, still along the pound. Okay. Pablo, I'm back in the market. Interesting to watch. Ha, damn, missed a trade on the pound. It's all right. There'll be 10,000 other trades. Okay. Volatility, compressed volatility. They're looking to break the volatility here. Remember, we're watching this. This is it's a screaming sell. And if this one gets stopped out, that's what you get. Now they're coming. They're taking Kudlow's tweets to heart. What does that mean? Probably something's going to happen. This is where a monster rally could happen. All right, moving. Still inside bar. There's so much confusion and so much going on in here. So what happens? Look like everybody's buying. Oh, there you go. Gold probably bouncing too. Yep. Of course, I trail stop today. Trolled like the best of them. Looking good. Looking good. So a little something happening at least. Now, here's the thing, right? So when they're probably the administration that, that's what they do. They're very good at manipulating the news, manipulating thoughts and all these sort of things. We have an ugly week and maybe the Fed doesn't do something. So this is the two thoughts. You have the Fed not doing or nothing's going to happen. And it's just Kudlow out there saying, hey, we're going to rally. That'll be disappointing. So whatever this bounce does, unless they get some reason behind it over the weekend or today, they're not going to get that like fuel in the tank because of it, right? However, and this is where their positioning would be, they come out and they say, you should buy the dip. And then guess what happens? The dip gets bought and news comes out and all this stuff happens. The next time you get a presidential tweet, next time you get a Kudlow saying, hey, you should buy this, people are going to take it seriously. So it's just going to add more fuel to it, right? So if nothing comes of it, hey, who knows what's going to happen. we don't watch news here. We listen to Wu-Tang Clan. Statement from the Fed. Fundamentals of U.S. economy remain strong. However, the coronavirus poses evolving. This was today, 2:30 p.m. Eastern time, 20 minutes ago. Poses evolving risks to economic activity. The Federal Reserve is closely monitoring developments and their implications for the economic outlook. We will use our tools and act as appropriate to support the economy. I think he said that. Everybody has said that. Yeah, everybody said it for the last little while. Okay, so I had some stuff. Gold bouncing. The way bonds are ripping, aren't they pricing in a cut? Yeah. Yep. They are pricing that in for sure. Wu-Tang. This one is tears. Not cream, but cash rules everything around me. Fellow Wu-Tang fan. No idea yet, NM. You're saying sell into the close. I don't know. I don't see a buy. I don't see a sell. The administration is throwing what they got at it right now. If Kudlow's coming out to talk, and if Jerry's saying that he's watching it, so they're throwing stuff at it. Grammatic is great. Sure, I like that too. So that was it, right? That was the big rally that they were pushing for. You send Jerry Powell in to talk, say, hey, yeah, here's my statement. We're watching it. You've had a 75 basis point mention this morning. Jerry comes in with, yeah, we're watching it. We'll do what we need to do to support the economy. And then Kudlow comes out and says, yeah, I'd buy this. And then Jerry comes out and says, we're watching it. I don't know. Yeah, gold was ran. They raised the overnight, they raised the margin requirements on margin requirements on gold overnight. So extra long levered people who didn't have, maybe they had too big of a position or whatever, had to either deposit more money in their account, which, as you're pointing out, there was a a lot of stops hit and margin calls this week. So then they increase the margin requirement on gold while you're getting margin called. And it's just, you have to sell. And then if you didn't sell yesterday and you take the penalty and you wake up today and gold's down as far as it is, you have to sell because you're beyond it. And that's just how they squeeze it, right? So could be right back to where we were. Who's they? Yeah, the brokers increase the margin requirement. So they're the ones that give you the leverage, and they're the ones that'll come back and say like the requirement. It might have been the CME, I forget. But I got a message from from Interactive Brokers saying they've raised the overnight or the margin requirements on gold, and if I wanted to, I don't know, something about like sell down a position by, like whatever, or maybe it was just an email saying, but anyway, that yeah. So a lot of people got that last night, and when gold's doing a huge rip like that, what's going to happen is, people are going to lever up because you're in this expansion move and everybody's waiting for $3,000 gold. So something to point out, remember we were saying earlier, we're going to want to have real commitment because this is a massive sell-off. And if it's just a tweet or if it's just a press conference in the garden and a message from Powell that that they think is going to hold the market, they're holding a lot of power right now, or dry powder. So, they've got 1.75% interest rates to drop. But if this is the beginning of something like that and they drop 0.75, 75 basis points, they only have 1% of interest rates to work with heading into a pandemic. Kind of crazy. So the market rallied on this 75 basis point move, didn't move it, pulled it back. Then all the news started happening in this compressed volatility regime. What has to happen in compressed volatility regime to get out of there? You have to rip out of it one way or the other. And that's going to flush, because the only thing that's been happening today is a sideways stuff. We get a little trading, but that's it. The interesting thing here is it's the currencies and the bonds that are leading this move. Equities are not. Equities are not participating. So what is that? It's harder to manipulate, as Bruce, my buddy, pointed out. It's harder to manipulate currencies and bonds because there's such big contracts. Trillions of dollars a day trades in the currency markets. So when you get moves in currencies, they are a little more real. They're not as fake, I guess, as equities can be. That was it. That was the best they could do at it right now. Thinking that they're just going to be able to hit it quickly. That wasn't it. They're not going to be able to do it. So this thing doesn't hold. They're going to dump. It's going to dump, and we're going to go to probably new lows. There's just not volume stepping in to take these. They've launched a couple of things. There's no volume to take these. Compressed volatility. Scared. Yep. Literally everybody is waiting for the Fed. And again, you know, I'm not a news person. I don't really care what the news is. All right, hourly update. Still nothing going on NASDAQ. Let's take a look at lower time frame to see what NASDAQ looks like. That was the news, and it's just dead. It is dead. That's all there is to it. This is the only thing you need to know. The only money that's going to step in and pick this up right now is day traders. I don't think traders have enough skill to bring this market higher without something big. And what'll bring, this is traders. This is all day traders. This is all swing traders doing this stuff. News headlines, maybe a couple of algos, whatever. It's not the big money that needs to step in to move the market. So we know what that will be. We know exactly what it'll be. It'll be Fed rate cut, or maybe, you know, we have the cure, something. And that is how you get a rip. Everybody's waiting. If you're a trader, you're in, or you're waiting like me, right? We're all just sitting here waiting for that. And it's just us. You know, we represent 5% of all the volume in the market. So all of this wasn't day traders. This was all big institutions repricing risk, right? So they had to dump a lot. They had to unwind hedges. There is a lot that had to be done. And also, hey, it's the end of the month. So stuff really needs to get wacky, right? And so now they're all done and they're like, okay, pal, your move. You know, we reprice risk. We're here. If you don't change interest rates, this is the first volley. If you don't lower interest rates, this is our first volley. We need it lowered. And so they run down. Nothing happens. All right, let's move into the weekend. I don't think it's scary enough in DC right now. I don't think they're scared enough to intervene with an intra-rate cut. Though every trader out there who's responsible for this kerfuffle, the algos and ourselves included, we're responsible for this. The big market, the big banks and everybody else is responsible for this. That was them. This is us. Okay? They're not closing positions. They're sitting there waiting for the right thing. And if they drop at 25, they drop 50, whatever, who knows? But headliners are sitting here and everybody's saying, okay, I'm positioned long. It's a Friday. We're going into the long weekend or to the weekend. And we're going to have all sorts of updated news on the virus and everything else. And stuff's going to get crazy. And so we've sold off a bunch. What is going to happen? They're going to step in and intervene in the markets. They're going to raise rates. They're going to do all this stuff. And so the real money has repriced. They're cool. Us traders are sitting here providing a bunch of fuel, just waiting to, you know, get the news that the Fed's going to come in with something. Everybody's sitting here waiting that the Fed's going to do it. And if it doesn't happen, you have to close your position. So you dump into the close. And then, you know, after the market closes, who knows? How would a 25 basis points lower rate? I mean, if you're leveraging billions of dollars on your balance sheet, and you can go from, you know, 2% interest to 1.75% interest, you know, that'll you'll make a lot more money. And so this is the way I see it. This is a negotiation between, you know, JP Morgan Chase, Bank of America, central banks, whoever, sovereign wealth funds, all that, a negotiation because they need the low interest rates. And if the Fed was raising and then didn't raise or cut last time, and then something like this happens, you know, where do you pay me to put my money to work? Because I can just sit there and not do anything with it during this risk. And so if the Fed's confident that it's not that big of a deal, then they can cut and then know that, yeah, guess what? It's not really the coronavirus. It's not that big a deal, you know, whatever. We can cut because we know that it's really not that big a deal, and we'll just be able to raise, and it'll give the all clear sirens. Anyway, it's the reality of all my thoughts on all that stuff is irrelevant. I don't care, and I'm probably wrong or whatever. I'm just talking about what the market is thinking and pricing in at these price levels, and who's participating. This is us. This is only the day traders, the swing traders, the knuckleheads on Twitter. That's us right here. That's it. This little move in the dollar was interesting. And the pound and the bonds, that was interesting because it takes more than day traders to move bonds. And look, it just keeps getting ripped apart. That's just look at that. That is just boom. That's just impressive. That's a massive move. 1.5% in a day on bonds. Unbelievable. That's big. You don't see big moves like that unless you think something is going to happen, right? $2 billion on market on close right now. That's old. Still got an hour. $2 billion to sell, market on close. We got an hour, so don't get too caught up in that. Everybody's getting excited. Bundesbank. So Germany is saying there's no need for immediate monetary action due to coronavirus, and I think they did something yesterday, right? So we're just not going to get it, and it's just day traders now. Okay. So that candle. Now we would look at a raising my stop up to a close below this candle, locking in a small loss. That's about a 1.2R win so far. Yep, bonds going. Gold trolling. Okay, so we're getting in new lows. We've put in a new low already once today on the Russell. Crest of all. Let's look at the Dow. Dow down at the bottom. Let's have a look at Apple. Apple holding up. Tesla. So we're just looking at the NASDAQ there, apparently. Dollar moving down. All right. Okay. I think, how would a 25, okay. It's bad that bonds are going higher. I got into the GE on the breakout at the beginning of the week. Nice boiler. People are moving money into safer assets. That's one way to do it. I don't trade vol, Bob. People are moving into safer assets. Yeah, that's one way to interpret the bonds. I don't use volume. I look at it occasionally for a volume spike at a turning point to see if that's actually a capitulation or if it was just a technical bounce or just a tradable bounce. I don't base my decisions on it, but a volume spike at a capitulative bottom with a bit like if the daily looked like this hammer here after a big sell-off and volume was like 4 or 5 times higher than normal, that's a bottom to me. Okay. That's what I would look at volume for. But no, I don't trade volume. I think trading off of volume is there's too many lies in the volume. A lot of people believe that there's truth in the volume. I think that it's more of a lie. There's only a few times, and that's when it's crazy. And volatility, I don't trade it. No, that's Tyler and Darren, which if you haven't heard my podcast with Darren, I've done 2 or 3 of them, and dude's awesome. Will, no, I don't know who it is. Yeah, I don't know who the guy is that they traded. He was a market maker, or still is a market maker in Chicago. And then volume at price, not regular volume. Oh, market profile stuff. Occasionally I'll do that. I think he's a prop trader. Yeah, he's prop or market maker. Bill Gates says coronavirus, maybe once in a century pathogen we've been worried about. All right, that's a nice little candle here we got forming up. Ooh, that's interesting. Nice little candle forming on that one. I like it. Remember, we have a really ugly sell setup here. This is a textbook sell into the trend, pullback, fail. Gets below that, that should signal it. Again, though, remember what kind of my core trading is all about is when levels get breached, that's often a reversal, not a we're out of here, we're off to the races. I also like to see the best looking sell setups in an uptrend because those are failures. That tells you that you're in a strong bull market. The best looking sell setups in a downtrend fail. That's good because that means that's telling you that's telling you that the bears threw out the best they could and bulls stepped in and really took it back. What does my gut say about next week? What can we expect beginning at the end? I don't know yet. Yeah, the money straddle has gone up the last 20 minutes, not down. Yeah, I would imagine. Yeah, totally. You have compressed vol here, right? Let's do SPX. Oh, also, one thing on SPX is, so I don't know if you were here, Will, for this. You said you came a little bit later. Darren's saying don't trust the SPX quotes right now. That's specifically from Darren. I'll find the message. He said, just talked to one of my insiders who talked to the head of the CBOE. Do not trade SPX options. He bolds that. Their quote feeds are shitty. They're considering not quoting weeklies at all. You'll be left to your own local market pricing. So you're going to price it and see what happens, see who sells it. So do not be messing with SPX right now. We talked about what happens during major market crisis times is that things like normal stuff that works every other day stop working. And right now, look, SPX is the biggest option market in the world, right? People are doing SPX. If they're doing, and we're talking big desks, big banks, big people, SPX is where they're playing. It's not, they're not tinkering with shorting biotechs or whatever. So when you have the biggest product out there really in trouble, and you have this low volume sitting around here, and this opening volley has happened, and they're waiting for everybody sitting here waiting for Powell to do something. Otherwise, there would have been more than just massive selling and just kind of like a breeze going into, every 5 minutes we get another case of coronavirus going into like a weekend. Lots of crazy. And there's the dollar ripping or dipping. All right, we got about 40 minutes on the trading day. That was a bull candle forming. I'll be right back. Pablo, yep. They're updating that thing. Just keep talking about it. Yep. Thank you. 1.4 and 2 candles, nice work. Yeah, it's a nice trade. It's a nice trade. We're coming into the last half hour. I'm going to get myself one last espresso made, and then let's see what we got. Closing in on 2R, aren't we? All right, let's see what we got. Okay, not looking good. One. Yeah, I'll be exiting the pound. Boiler, yes, I will be exiting the pound if we don't hit price target. I think everybody's starting to realize our last 30-minute candle here happening. Here we go. My guess is we go to new lows on the market. That's what it's looking like right here. Remember though, we want that a failure. We definitely want a failure. So a failure gets us to a failure to sell off harder gets us into a long, that's when you want to see. So a capitulation spike lower, they're holding, you know, it's traders. This is just traders right here. This is just us. This isn't like no big firms, no big money is, unless they have a monthly rotation and they need to add at the end of the trading day, for some reason, or at the end of the month, like at the end of the month or something like that. That's the only reason we would have, that's the only reason we would have that. Long trading day, huh? Didn't do my usual 2 hour. It was not, I mean, I'm not gonna say it was fun. Standing around doing nothing, but Lebanon's closing schools till March 8th, first week, next weekend, I guess. Let's cut the music. Something's going on out there. Just can't seem to keep hearing noises outside. I just can't seem to pay attention. All right. Yeah, so FedEx. Jalapenos. Gotta love them jalapenos and steak. I guess if nothing happens, we don't even have to slam into the close. I guess I'm over here thinking that, yeah, most likely a slam into the close, but we don't actually have to have that either. Let's get the vol. We know that vol is compressed, extremely compressed. We can see it in all our charts. So there's a sell on the 2 hour, sell on the 1 hour. Most likely close low. U.S. lawmakers are being advised to put telework plans in place. Yep. I have some thoughts on how actually transformative this coronavirus will be to our world as we know it, and it's a good thing. The outcome, I should say, what has to happen to get people, to get here, is that we are going to restructure. We have the networks now. We have the communication systems. Why do you have to have a house and a car and go to an office where you have a beautiful home where you work from? You have the ability to put up on your screen and do work. Why do you need to get into a car and drive to an office, get on a rail system, any of those sort of things? Why do you need to do that? Why can't you do it remote? It's actually somewhat prehistoric thinking, not prehistoric, but that's industrial revolution thinking, right? Because prior to the industrial revolution, what was everybody doing? They were just plowing in their fields. Some people were locksmiths, and some people were metallurgists, some people were doctors, some people were lawyers, some people, shoemakers. But it wasn't really until the Industrial Revolution where you had mass production that needed to be done. And so then you had warehouses and you had offices and you had places for people to go, all these sort of things. And you got a lot of good stuff done together. And there is still definitely a lot of quality that gets done together, like us, for example. If we weren't meeting like this, maybe many of us would just be sitting at home doing nothing. So I think one of the most beneficial things that could come from this, and I'm an optimist. I'm an abundance mindset person. So don't think I'm flippant when I say the positives of the coronavirus. I don't mean it in the sense that I, hope it really happens and I want people to suffer. No, not at all. Not in any way. Least of all, 2 months before my son is born, into a world like that. How crazy is that to think of? But what happens is you restructure everything. We're already on a on-demand sort of economy, right? So if people are located, distributed in homes, and maybe co-working spaces probably have a place. Certainly some businesses do. They would benefit from it, from people getting together, certainly all sorts of things. But if you just have this generational shift, because think of the internet, right? How big that has been impactful on our society. And yet everybody still goes to an office to do that. It just seems like we're lagging 30 years ago when the internet really started to happen. 25, whatever. We had visions that things were going to be like Star Trek. And so when you have a virus, when you have something like this, it's going to force people to, here we go. All right. What's going on? Cable spiking. Okay, we've got bonds going to all-time highs again, new all-time highs. Bonds spike. Gold has come back. And so, yeah, Bob, exactly. That's why things like Netflix and TDOC. What's TDOC? I don't know what TDOC is. But exactly the point is you think bigger term, like what's happening in the world. What's happening in the world and how do you prevent it? Well, stop, if this is the case, stop going out, stop doing things, get your PPE, your protective equipment, take care of number one and number two and number three, take care of you. And then you have, order your, you can have your supplies delivered to you. They can arrive on a pallet on the front step or whatever. Remote doctors over the phone, all of this. It was not going to get done. It wouldn't have gotten done had something like this not have happened. And no, I'm not saying that it's going to happen because of it, but this would be a very positive outcome here of, what we would see. Actually, it's more like here. So we're, okay. I'm gonna probably be looking to exit here in a little bit. Anyway, sorry, I didn't mean to get on my soapbox, but I love being on my soapbox about those things. It's, you can have a growth mindset or a fixed mindset. And I choose the growth. Nice move. Well, then get a better job, Will. I'm just kidding. Don't mean that so flippantly. But the thing about it is you can create your own business. You can start your own business. You can do all these things right now without needing, it's so much easier to start a business and get running and do it in your spare time. Kind of like what we're doing with trading, right? Like a lot of us, I'm sure, Will, the reason you're looking to trade is because the baby boomer boss. Probably a very nice guy, has a great lawn. I'm sure his lawn is very, very organized. His country club membership is well paid for and well used. Well, that's right. You are. Oh, that's right. You did send me that big email. I know I haven't finished it yet. I get going in this stuff, and then I got like my big system going at the end of the day that I'm just, massively building and back testing and putting together. And I don't get a chance to really get into my emails all that much these days. So, all right. Just as I am leaving the nomadic life, you're taking over. Pass my carry-on bag to you on the tarmac. My last trip will be, lives on a golf course with a beautiful yard. Nailed it. He's a baby boomer. That's their dream. My dad's one of them. He's got a beautiful yard and a painted driveway and lives on the golf course. But he's smart enough to not live on the fairway because people like me play golf. All right, we're getting into the last 15 minutes. It's all traders here. We are at a balanced market. I call this a balanced market. There's going to be sideways discovery going to happen next week. Somebody asked me what my call is next week. We could do a little bouncing. We're probably going to do a lot more banging around than anything else. That seems better of a scenario to me. More of a banging around market versus a manic depressive market. All right, I'm going to go ahead and offer out on pound. I may just actually take it at market, but okay. High of 128,337. I'm going to go 128,335. Yeah, I'm going to sell out at 128,335. Okay, order in. And yeah, let's just add it here to trade. Oh, no. 325. So I'll be looking to exit here, right in here. So we're going to go above. I'm going to pause that. Hold on that order on my. Nope, I'm going to leave it. 128335 exit. Uh, 12833. Yeah. So anywhere in here is where I'm looking to exit. Likely what's going to happen is we're going to get above this little spike and we'll get a little bit more drama going on, but this is going to be our congestion area. And this is a safe area. So look at that. Just a move, huh? Microphone's in the way. I can't see my screen. Okay, so I've got my order in, and just for the sake of seeing it on the screen, we have a sell limit up in here, 128,335. If it doesn't fill, that'll be fine. I'll just go ahead and exit at the market. Oh, remote doctors on call, telephone doctors on call, TDOC. Got it. What happened to Russell today? Russell put in new lows, but the other markets have not yet. And Russell's a trading market. So here's some of that, price action we talked about. Like every time you get a spike below those lows, it spikes and then it reverses. And people tend to sit here thinking that, oh, as soon as this low is broken, it's going to crumble. And that's subjective. I don't think that that's always the case. Sometimes it is, but now here, inside bar on NASDAQ. This is the sort of thing that happens after a massive move. I feel like I wasted my entire day just sitting here, except for this pound. Trade. Look at those wicks. It's algos and just traders handing things back and forth to each other. Looks like I tried to nail it just perfectly and I got a few bucks off. All right, I'm going to go ahead and close out of the pound at market. Okay, filled. Let's just, I don't know how to do it here. Sometimes the order thing, I think it's just a market. Yeah, I don't know. Anyway, we're exiting here at the market. I've exited at the market. No, not that one. So at the market, there you go. All right, according to our charts, basically, where did I get filled at? I got filled. Got filled right at 28244. Let's call it there. So entry 1 point, what was that price? 27611, that's right. Stop we had at hourly close 127258. Where's this one at? Where am I? 44. 1282. I get over here. 128244. Almost a 2-hour trade. Considering I did like 1 trade this week. Grant, good stuff. Congrats. That was the place to be. Get down the mountain and update your stuff at the end of the day. Smart man, smart man. What's your thoughts on the weekend news for stocks? I don't know. I'm 100% in cash at the moment. I have no positions except Bitcoin long. I have really no opinion on the market. I think we're going to have a whole bunch of kerfuffle happening this week and next week. I don't know. I'll develop a thought process over the weekend, I'm sure, of what's going to happen. I don't really know at the moment, though. The world's expecting the Fed rate cut. That never happened. And that's just a big 1.5% move in bonds after going to all-time highs. Like or not all-time highs. That's not true. Still have this way to run. 177. We can still have room. We got $7 whole to go on bonds. So when people are saying that there's all-time high on bonds, that's not true. They're too lazy to look at a chart. So the only thing I'm going to see is we're going to have bears covering because they've had a long week. They were expecting a bit more today. Some bears got short and we're hoping for more. Didn't happen. Mostly traders, I'm saying there's going to be people who are going to be like, yeah, I'm going to cover my short. I'm done. I don't want the Fed to come in and print do that, like run the thing. So yeah, that's going to be the case there. So we're going to get bulls buying there. It's an interesting bottom. I don't think it's decisive in any way. This is not decisive in any way. This is just a bottom, more like a breath. So we could have more weakness, but I would say they're going to make some attempts to run it back. There's going to be a lot of people who are going to read about this weekend, and they're going to think to themselves, oh, wow, we have a great buying opportunity. We're down 10%. So you're probably going to have a dip, and it's the first of the month too, Monday. So I'll be trading Sunday evening and working with mentoring one of our traders, who she has a full-time job, so we can only work in evenings and weekends, and she's on the East Coast, and it's tough. So we're going to work on the open of Sunday. Any other questions, guys? I think I'm wrapping up here. I know everybody's expecting this massive, dramatic move, which was great to get like 30 people into our 30 or 40 people into our little chat today. A lot of fun. Really enjoyed it. I guess Trump came out saying that you should buy the dip. So I am 100% cash except Bitcoin and going into the weekend. So if I miss this face ripping move, and we have a face ripping move, then woe is me. I don't mind. I can trade that. I'm a trader. I can get in and out. No issues. Yeah, talk about just nothing going on. Will, you have a great weekend, good sir. You know, really, it's just going to be an after hours announcement. It's the only thing that we could see right before or right after the market closes. Ugh. Just buying to cover here mostly. I don't know, unless some news just happened. I don't see anything else happening other than that. It's just a buy to close. Shorts any short who has been through any of this has probably seen today and thought to themselves, I'm gonna take some off the table. There's probably some people buying too. Yeah, there's probably definitely some people buying. They're closing up, you know, and they're just thinking to themselves, yeah, you know what? I'm gonna buy the dip just in case. See how gold is shaping up into the close. Massive troll today. See how Apple's working. Apple's rocking into the close. All right, so there you go. Let's have a look at the daily, Simon. That is what a bottom candle looks like. That is nice. Good call, Simon. Yep, that's definitely a bottom type candle. So we're going to be. So the thing I want to point out is when you have candles like, so we got a vol breakout close, got a reversal. When you have a candle like this is a very bullish candle. That's a very bullish candle. And if it can hold, that's bullish, very bullish. If it fails, then we're in trouble. That's where you know something big is happening. Okay, push through the hourly vol as we've been talking about. At the moment, all I'm thinking is that this is just covering. They're just covering this. Like you're going to have, you might have a people, you might, you know, Powell might have texted a few people saying, hey, yeah, we're going to run it, get in. But otherwise, yeah, it's going to be a lot of short covering. Let me see how we're closing. You know, this is something this is very bearish setup, but it's after a very extended move. And this big bull candle right there, it's still an inside, but that big bull candle, that says a lot. Thanks for the heads up on that one, Simon. I'd definitely be looking at all of the dailies through the weekend, and I'll be going, getting in positions Sunday night. Yep, there it is. That is a big reversal candle. So we've busted outside of the Bollinger Bands, a move up to here after hours, closing outside the bands, and that's a vol breakout. We haven't vol broke out yet, but you can see everybody was sitting here waiting for this to happen. I don't know if anything's happened, but either people are just extremely bullish or there's a lot of short covering. Let's see what is going on. Let's see what it looked like. Pretty wild. This was a 2% candle. 2% move in one candle. And that was in 10 minutes. In 10 minutes, we moved 2%. In 20 minutes, we moved 2.5% up. That's crazy. Very interesting. Maybe it was worth sitting around waiting for the final. Was looking pretty bearish earlier. I'd say, let's see if we overtake it. It looks, that's a bullish. So the best sell setup in the world failed. I mean, that was a really nice sell setup. The only thing that makes it not nice is it's a Friday afternoon, right? Pretty big. So there it is. You have a buy stop here and your lows are in, or you could even put your stop here, and that's the trade. Nobody's buying. I mean, you don't buy calls right now because you're going to spend $25 on a call that should normally be priced like $2. And then you wake up on Monday morning, and instead of gapping up enough to do the premiums are just sitting there. You can gap up. You could gap up Monday all the way up above 9,000, going long at 8,300, and you still could end up losing money on those options. So nobody's doing that right now, unless they're just nuts. So futures are the way to trade it. Okay, I think that's it. We're getting our massive ramp into the close. Probably going to get some news, or if it hasn't already happened, I don't know. Probably. I don't know. Let's see what the Twitter says. Trending United States, Jerome Powell. Amazon has started restricting all non-essential employee travel in the US. Okay. That was a 3% move, huh? All right. So we're doing repositioning at the end of the month. My wife. Wifey's back just in time. Yeah, I don't even know. Other than, you know, pensions rebalancing, short covering. All right. Yep. Looks like they're going to do some sort of rate stuff. Pension fund buying. Hi. Dow closed above 250 moving average. All right. Wow. And that's just going to bring the buyers. So now everybody's thinking, this is it. This is it. Let's do it. All right. Yeah, I got nothing to say. I got nothing to say about it. Good stuff, guys. Congratulations if you took the pound trade we took today. There's a couple of little NASDAQ trades. Some of you might even still have sat in it. We're still compressed volatility on the 60. Haven't done anything. You know what's going to happen Sunday night at 6 p.m. Eastern. Something's going to be there. Something's going to happen. It could stay right in there. I mean, either way, there's a lot going on in the markets. I'm done. That's it for me. Where's my little, there we go. That's it for me, guys. I am out of here finally. I've been threatened to leave for forever, and now I'm really going to do it. So have a great weekend, guys, and everybody. And, hit me up on Twitter if you have any questions, and let's have a good weekend.